Hello everyone, welcome to another live stream. So Tuesday, as they say, Taco Tuesday. Taco means Trump always chickens out, and I think it's the song from the Migos, but I'm not exactly sure. If you have any questions, any chart requests, anything you want me to cover, I have the comment section on the side, so make sure you put in a comment. But for the beginning of the stream, I'm gonna get you up to speed as to what you need to know. So yesterday we talked about a lot. We covered the summary we prepared for this week, and the main summary is that the activity is down. We have summer months. It is the peak of July. Most people are on vacation right now, so that's just the truth. At least here in Croatia and in the European Union. So essentially, a lot of vacations they happen at the end of July and beginning of August. Now, I'm not sure how it is in the States. We know that the United States is the biggest player when it comes to the financial markets. They are the ones moving the market. But here, it is definitely right now. So summer months, a bit of a slower trading period. There's less eyes on the markets, there's less capital in the markets, and it is reflected in the price action, okay? So let's take a look. The first thing that I look at in this current market environment is the price of oil, okay? The price of oil, whatever you're trading, whatever you have on this list, it is connected with the Middle East. It is connected with the price of oil, okay? That is how it works. Because it's all about the inflation, it's all about the interest rates, it's all about the Fed, the central bank of the United States. Will they hike, will they stay neutral, or will they cut interest rates? If you look at oil, if you look at Brent, basically, it's still on an uptrend, although Friday, Monday, and today are bearish. So starting to pull back a bit. Personally, I still think this goes higher. I still believe we can hit 100. Now, if we look at the Strait of Hormuz traffic, which is the portwatch.imf, now, unfortunately, this thing has not updated since July 19th. So we're not getting the most fresh data. I don't know why. Maybe they are on vacation as well, but I don't know why this hasn't updated yet. It is a bit strange. Okay. But the Strait of Hormuz is definitely still closed. So the traffic, in my personal research, the traffic is still really, really low. And also, let me just go grab a glass of water and I'll be back in a sec. Okay. That's the first thing you need to do, right? That's the first thing you need to do for this market environment. You need to identify, is the Strait of Hormuz closed? You need to identify, is energy, or basically the price of crude oil Brent, not US oil, Brent oil, okay? Look at Brent, not US oil, for the Middle East conflict. Is this on an overall uptrend? I would say it is. Now, yes, we got a pullback because we got some risk. We got some risk on comments during the weekend. We also got, if you look at the breaking news, we got some risk on comments yesterday. So Trump said Iran wants to meet and we are meeting. There's a chance we can make a deal. So I can understand that oil is pulling back. I can understand that maybe stocks like the equal weight, the RSP, is it at all-time highs? Is this correct? Yeah, all-time highs, almost. So this is the S&P 500 equal weight ETF. Now, for the regular ETF, for the S&P, for the classic S&P, the tech stocks are highly overweight and all of the rest is underweight. So the SPY looks pretty bad. The Qs, which is tech stocks, look horrible, but the RSP is near all-time highs. So there is a clear rotation, and that is something that I saw on Twitter as well. There is a clear rotation out of tech and into other sectors. Personally, when I look at trading stocks in general, I look at the SPY. I don't look at RSP. I look at the SPY and also the MAGs. Yeah, the MAGs don't look good either. And the SPY is bearish. It is sitting at support. It is below the 10 EMA, below the 20 EMA, and below the 50 EMA. That is very, very bearish in my opinion. So Brent overall on an upward trend. Because of that, I'm betting that inflation goes up. So our CPI inflation, let's take a look on the Edge Finder. Inflation, CPI, USD. So look at what happened the last time that the trade was closed. 3.3, 3.8, 4.2, and then it was open briefly. We got 3.5, but it's closed again. It's closed again. It's mined. US is doing a blockade. So I think this can very easily go above 4.2%, maybe even to 5%. That's a big problem. That means inflation is going to be highly elevated and the Fed will be able to do a rate hike, which they have been dying to do. At least that's what I got from the comments. So the Fed is pretty happy to be hawkish. Now, I don't think a rate hike will happen this week. We have a meeting on the 29th of July, which is basically tomorrow. I don't think a hike will happen then, but on the 16th of September, very likely. Very likely. Especially so if the strait remains closed, if oil if oil continues to go up, maybe hit 100, if the CPI comes in hot, okay, then I think that's going to be enough ammo for the Fed to hike rates. Absolutely. I mean, not absolutely, but that's the bet. That's what I'm betting on. So 55.4% chance that we get a rate hike in September. Here's how I'm positioned. I have bought USD CAD. I'm betting on a hawkish Fed. I'm betting on a rate hike. I'm betting on the dollar going up. I'm betting that USD CAD goes up to these highs, at which point I may take profit. Okay. So this trade has been working fine so far. It's in a little bit of profit, but nothing to write home about. So that's my main position when it comes to betting on dollar strength. Swiss yen is a new trade that I have. It's a short. Okay, this one has nothing to do with the Middle East. This is a pure play on the yen. So as I mentioned, it gives you alpha without the beta. The alpha being your edge and the beta being the correlation to, just move the camera a bit. Oh, is this better? Oh, this? Yep. The beta being the correlation to the Middle East drama. So the yen, if you are following the Japanese government, they want to push the yen up any means necessary. They're starting to lose popularity. The Japanese population and businesses are losing purchasing power because the yen is dropping so much, and the Japanese government has free tools at their disposal. Quick lesson, the free tools are: first, intervention; second, rate hikes; third, GPIF, pension funds. It's not TGIF, it's GPIF. So intervention, they can come in, buy or sell a bunch of US treasuries, push the yen up. They can do a unexpected rate hike. So let me show you. Bank of Japan is scheduled for this week Okay, they are scheduled for Friday, July 31st. So they can absolutely do an unexpected rate hike as they did in July of 2024. Finally, they can do the pension fund route. So they have already ordered the pension funds to start selling foreign assets and buying domestic. Now, it is a matter of time when those funds will actually abide and start the process. By the way, so if the pension funds sell foreign assets and buy domestic, that should help to push the yen to the upside. And I think I already saw some articles, GPIF. Here it is. So GPIF makes first direct private equity investment amid allocation bets. So it already started. It's not really showing in the price, but it has already started. So Japan's government pension fund is investing in a private equity fund that's focused on domestic projects. First direct investment in the asset class. Speculation grows whether it will channel more money into its home market. Okay, so that's the bet when it comes to the yen. The third one has already started, I believe. We could get an unexpected rate hike this week. An intervention could happen at any time. I don't think an intervention will happen, but it could happen at any time. My bet is the Swiss yen. So why Swiss yen? Because all of the rest of the options are really expensive when it comes to negative swaps. With Swiss yen, you at least get positive swaps, or depending on your broker, you may get break-even swaps. So essentially, I can hold this position for 1, 2, 3 months and still be sort of neutral when it comes to swaps. We already got some weakness yesterday because of the bearish news out of Switzerland. Let me see. So this was it. SMB expects to keep the interest rate at 0 until the end of 2027. That is considered dovish. Dovish is bearish for the currency. So the Swiss franc lost value on this news, which made Swiss yen go down. It broke 200, which was my trigger to get in, and I sold. Okay. By the way, this was a signal in the A1 Discord. So if you want to get all of my positions, Chris Pulver, Nick, of course, Iwind, and Alan, if you want to get all of that, there is a link in the description to join the Discord. I'll post the link in the comments as well. So give me a second. Free Discord. Okay, post. You can find the link in the comments. So basically, the free Discord you can join for free. And if you want to get all of the premium stuff, like all of our positions, all of our trades, all of our analysis, full analysis, then you can become a paid member. You can use the code Marco to get 45% off, I believe. So we're running a massive summer sale, biggest sale of the year. This is for the Edge Finder and for the A1 Trading Discord, the premium, okay, the paid version. So if you want to join us, if you want to work with us, use the code Marco, get 45% off. You can use the code for the Edge Finder or for the Discord. All of the links are in the description and also in the comments. So just wanted to put that out there if you're interested, because it's the biggest sale of the year. It's not going to be there's not going to be a bigger sale than that anytime soon. So do take advantage. I think it runs until the end of July. So it is kind of the July summer sale. So Swiss yen, that's my two positions. That's about it. USD CAD and Swiss yen. Both are not doing much, as I mentioned at the beginning. So, as I mentioned at the beginning, the markets are a bit slow. There's not much happening. The volatility is down. I think a lot of people are waiting for the Fed tomorrow. So that could be another catalyst that we need. To be honest, I don't think much will happen. The Fed funds rate stays the same in my personal opinion. We do get the press conference. So we do get Warsh, the speech from Warsh. I think Warsh could sound a bit more hawkish than people expect because inflation is going up, because this rate is closed. So that hawkish meeting could help my positioning. So it's going to be pretty important to follow. If there's anything super important after the meeting, you will be notified in the Marcos Journal section of the Discord. Okay. So that's an event. The BOJ, there's probably some players waiting for the BOJ right there. There's a lot of people waiting for the core PC price index, which I think is a lagging number. You can see the forecast is for a lower print than the previous. Do we have the bet on Polymarket? So core PC price index. Let me see if we do have a bet on Polymarket or Kalshi. Let's see. So this is July 30. Okay. So we do have a bet. 83% chance. 83% chance that it's below 3.3%. Is that similar to what we have here? It's always best to cross-check any forecast you find here in the calendar to cross-check with Polymarket, because Polymarket should be more accurate. If you look at the last 5 years of predictions, Polymarket was much more successful in predicting stuff compared to the Forex Factory calendar, compared to Reuters, compared to Bloomberg, and any of these experts that don't have any skin in the game. It's basically experts putting rough estimates, rough forecasts, and they don't have real money on the line. But on Polymarket, there's actual people betting real money. Look at the volume. So volume is super low. Just what, $18,000. That's too low. Okay, this is not reliable. You need a higher volume. What's the spread? Can we get the spread here? Yeah, we can. The spread is too high. The spread is 4 cents. Yeah, not good. Okay, this is unreliable. But just for show, so the main bet is that it's below 3.3. The previous number was, let's jump onto the Edge Finder. Let's go to the PC. The previous number was 3.4. So looks like both the Forex Factory calendar and Polymarket is expecting a cooler print, but it's lagging. So I wouldn't rely much on this print. The reason why it's lagging is because lately oil has gone up a lot, especially Brent. So oil has gone up 34%. That's massive. Straight is again closed. So inflation should go up, right? This is a lagging print. New prints, like maybe the next CPI and the next PPI, they should come in a bit hotter than expected. Maybe around 4%, maybe a bit higher. As far as the CPI goes, I think that is a good prediction. So good morning to everyone that put a comment at the beginning. Any update on next gold trade? You should wait for him. So we have a new schedule running. Basically, the goal of the new schedule is to try and prolong the stream as much as we can. We're doing double segments per day, and Nick will be on in, I think, 1 hour. So you can catch him in 1 hour. You can find the full schedule on the A1 Trading website, the full live stream schedule. Kevin Warsh, finishing the gold bull market successfully. Where is the moon? As far as gold goes, I do need to burst your bubble and say that it's highly unlikely we go to all-time highs and create this rally again. Okay, very, very highly unlikely. Now, if you study the markets, if you do some backtesting, you will notice that gold has periods of a decade where it does nothing. And once it has a massive move up, if it makes 70, 80, 90, 100% in 1 year, the next year is usually break even or negative. So that's just what the data is telling you. Look at the last time we had a massive bull market. It peaked in 2011, and then we did nothing from 2011 to 2019. That is 8 years. That's 8 years of nothing, right? So my best advice would be to expand your approach, look at different things, focus on something else, because gold right now, in my personal opinion, there's probably traders out there that have a different opinion, but my opinion is we're in no man's land, we're stuck in this range, and I would rather look to sell than to buy. For me to look to sell, I would like to see a break of the 4K level, a convincing break of the 4K level. And then I would be happy to look for sell setups. So that's how I'm looking or approaching gold. People are underestimating how hawkish he will be. Probably he could be hawkish. So far, he has been pretty hawkish, not gonna lie, but you never know with these Fed guys. You just never know. Some of them want to suck up to Trump. Some of them don't want to be the big bad boogeyman and actually hike interest rates. Warsh could have pretended to be a massive dove to get elected. Now he could turn hawkish. He has already turned hawkish. It would be a big sort of FU to Trump, which would be pretty funny to see. He could be the B word and just cut rates or be very dovish and basically follow what Trump is saying. So there's very little edge in that. There's very little edge in trying to predict the speech from Warsh. We just don't know much about him. You know, Powell stood his ground mostly as far as I can see. So Powell actually was hawkish when it was the time to be hawkish and didn't really follow what Trump was saying. Warsh, too uncertain. So my best advice would be to focus on the data, focus on the numbers. The numbers are telling you oil is up. Oil is trending up. Strait of Hormuz is closed. Inflation should go up because it has already gone up when the strait was closed the previous time. That's raw data. Those are the numbers. So that's what I follow. That's how I place my bets. Trump said we should have the lowest rates in the world today. Trump is Trump. Like we already saw all of his tweets in like, I don't know, a couple of months ago. So they just repeat. And he makes a deal every single week. As soon as the stock market goes down a bit, he makes a new deal that's basically non-existent, of course. Gold needs new investors to buy in this. Yeah. So look, the retail got burned. If you look at the gold, can you imagine how many retail players bought the top? It was a lot. If you look at Bitcoin, same thing. How many people bought the exact top right here? If you look at SpaceX, a lot of retail bought right here because they love Elon Musk, right? They just don't care about the numbers. They love Elon Musk. And it's a strategy. It's not a good strategy, but on Tesla, it probably would have worked. On SpaceX, doesn't seem to be working so far. So the retail has experienced massive losses. And when it comes to cycles, the retail is not happy to jump back into risky assets after losing most of their investment after being massively leveraged. So they usually need a couple of years to forget about all of the losses, and you need for the new crowd to come in, okay, the guys that are going to be 25 or 30 years old in the next 5 years, that have earned their first paycheck and that want to invest and that don't know anything about investing. You need them to come in and buy into gold, buy into Bitcoin, buy into SpaceX, and all of these other assets that have gone massively down lately. Okay, so you need the participation of the retail for another cycle to start, for another bubble to create. Warsh is gonna kiss the ring and hold. Well, I do think he's gonna hold rates, but it's about the forward guidance. So forward guidance tends to be the most important. He just got rid of too late Powell. Washed up Warsh. Yeah, it'll be fun to predict if Warsh is actually hawkish. It will be fun to predict what will be the nickname for Warsh. Yeah, my voice is cracking up. I don't know why. AUD USD short, cooling inflation, Aussie with rate hikes for the USD. Yep, good approach. Good trade, I would say. Betting on dollar strength, I like it. Not even gods can prevent gold from falling to 3,500. Central banks are running out of dollars and begging for dollar loans. Let's see, what else do we have here? What's up? I have some scammer always calling me on my phone. So, like a couple of years ago, I signed up to a sketchy broker, and the guy that works there probably sold my data, sold my number and email and everything to a scammer list. So now, like once per week, I get a call from a scammer, and I can't block him because he keeps changing his number and he keeps calling from a different country. I'm gonna have to change my number. It's awful. Let's see, what else do we have here? GJ, gold market maker when I grow up. Okay, so I have 4 more minutes. You said it's a once in a generation opportunity. You're wrong. Well, first question, how old are you? Second question, did you do any back testing? Third question, how long do cycles on gold usually last? Let's do some quick back testing right now. And I know a lot of you came in 2025 into the markets. I know because when I make a video about Bitcoin or the SPY, it gets okay views. When I make a video about gold on Instagram, it gets like 3K, 4K, 5K views. So like a 10x difference in views. So I know a lot of you are following gold. Quick case study. Look at this. From 2020 to 2023, nothing. Here, from 2011 to 2019, nothing. Here, from the peak, look at this peak. This was crazy. This was massive. In the 80s, we waited for 2005 to start going into all-time highs. Probably the monthly chart will be a bit better. Yeah. So from the 80s to, let's say, the bottom around 2001, something like that, that's 20 years of nothing. So it happens. Here's another one that we covered. And I think the latest one has probably just started. So there's many different things to trade. If you look at any professional traders, if you read any of the Market Wizards books, professional traders trade everything under the sun. They trade anything that is moving. I haven't heard of a single market wizard who just traded the SPY, who just traded gold, who just traded silver, or who just traded Bitcoin. I haven't read about him. I haven't heard about him. It's not going to happen because a single asset can be range bound for years, even a decade, even 2 decades before you get the next cycle. Okay, so that's my best advice. I know you see a lot of SMC, ICT traders on YouTube who trade only the Nasdaq, only the SPY, and those guys they earn all of their income from courses and not from trading. They don't even trade probably. They just paper trade and fake the numbers on the screen. I've seen it happen, I don't know, 10 times already in the last 2 to 3 years. So do watch out who you're following. If you're following us, A1 Trading, you're in the right place. If you want to join the A1 Discord, I'll post the link one more time so you can join for free. It's a free Discord. Let me copy that. Post it in the comments. So there's a link in the live stream description and link in the comments. You can join for free. Or if you want to become a paid member, get access to all of our trades, all of our signals, all of our ideas live, you can become a paid member as well. Do use the code Marco. So the code Marco gets you 45% off on the Edge Finder and the Discord. So it's a summer sale, biggest sale of the year. I think it runs until the end of July. So do take advantage. That is about it. Thank you very much for watching. We have the next guest coming on in 30 seconds. you can catch me in 2 hours during my second segment. So good luck and see you in like 2 to 3 hours. Goodbye.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. How's everyone doing, ladies and gentlemen? It is Tuesday. Good to see you. You have me for the next hour or so. So let me know if there's any chart requests, anything you want me to go over specifically. I'm happy to do so. We do have some time to kill today. I am very tired though, so I won't be as quick and witty as I normally am. Sorry, I've got hair in my mouth. Gross. Don't know where that came from. Still having the debate about gold. Fantastic. Same conversation as yesterday. Love to see it. Fun stuff. Okay, what do we have? Ray Beast. Good to see you, my friend. Hi, James. My model took GBP/JPY long. Also right now working on a new model for fixed incomes. Very nice. I'm also in pound yen. We can go over my positions in a moment though. Hope it goes well for you. 2288, good to see you. Gabes, good to see you as well. Gold. Wow, gold is a hot topic. It's funny, gold doesn't do anything for a little while, and it's still the most requested asset. Yo, hello to you as well. Hope everyone's well. So pound yen does remain the most bullish reading on the edge finder right here with a score of 11. So overall is looking fantastic. So the technicals also do really back up the same idea. So we have the bullish trend here on the H4. Moving averages are nicely fanned out, 200, 100, and the 50. Trend is perfect. Again, with the edge finder, it's looking like a great trade. So fib from the low to the high, I decided to enter on the pullback into the 50% retracement, which was also a retest of this prior high. Now, unfortunately, pound yen isn't working. I know the reason I'm saying unfortunately is not just because I'm underwater a little bit on this position, but it's actually unfortunate because I was in a bit of a mental battle between myself. Do I take pound yen or do I take CAD yen? Because CAD yen was also a very solid option. It was basically the same setup. It's also on the edge finder. I decided to go pound yen because I didn't really want the exposure to oil through the Canadian dollar. And pound yen is also a slightly more bullish reading on the edge finder. So this was the decision. Go pound yen over CAD yen because I don't want to take both trades. There was no reason to do that with the potential intervention risk. And typically, CAD yen is the one that's running and pound yen is the one that's underwater. So that's the way the ship sails sometimes, sadly. But yeah, there you go. So yeah, still long on gold. Again, as I keep saying, these are very, very small positions and over a long period of time looking to accumulate gold. So don't take this as a signal by any means or financial advice. These are just something I'm looking to do. Basically just buying gold on a discount for the next, 6 months, 1 year, so on and so on. Happy to hold gold for as long as it may take. I am short Eurodollar. I haven't really discussed my short position on Eurodollar very much because it's not a swing trade. It's kind of similar to gold, but in a more short-term horizon. So I'm in some short DCA positions on Eurodollar with a staggered approach. So again, sort of DCA style. So the entry you see here, this is just my average price, not the real entry, if you will. I've got a few different entries throughout this sort of range. My stop out level is at the previous high here, which is towards 1.16. And I'm looking for maybe the area around 1.035 over the longer term. So this is based on the idea that we might get the hawkish Fed or slightly hawkish. We might get inflation picking back up, although we do have the situation with Iran. This seems to be seeing a little bit more optimism. So we'll see how this trade goes. But yeah, there are some pretty good factors that I'm happy to go a bit deeper if anyone does want to. But we'll keep it relatively surface level for now. And EuroCAD, a little bit of a disappointment here. This was an interesting trade. So we ended up getting tapped into this one. We came up to around 0.7% return. So it was looking quite good. And it's just come all the way back to entry, which is fine. You know, it's one of those things. But yeah, I'm going to leave it to run now. But yeah, it's not the most eventful trade at the moment, so nothing going on there. So I'm pretty kind of flat, really. Gold's not doing too much. I mean, profits on one position, loss on the other. So it's basically break even. Obviously, average price in the middle of the boat of the two of them. Euro dollar's in some pretty decent profit. Pound yen's in a bit of a loss, and Euro CAD's basically at entry. So yeah, nothing to shout from the rooftops about at the minute. Right, let me catch up here. Forex Ali, good to see you. One Opportunity, good morning to you as well, my friend. Good morning, Gold Bulls, for another red day. Yeah, it's not looking fantastic for the short-term gold traders at the moment. Gold, thoughts on Eurodollar? Okay, yeah, we can dive deeper on Eurodollar, no problem. Again, we are here for a little while today. We've got another 44 minutes, give or take. Actually, no, 54 minutes, sorry. Gold Bulls crying for help. NDT, my friend, you need to relax on this gold narrative idea you've got. It's great to have your idea. That's completely fine. But this is the third day I've heard you just complaining, my friend. Relax. If you've got your idea, express it in the charts. Again, cool to put it in the chat, but for 3 days reading the same thing, it's getting a bit tiring. GBP/USD pivot buy. I love pivot points, my friend. That's a good idea. Let's have a look. Let's see what the pivots are saying today. I actually have my own pivots. Let me see. Daily pivots. Let's go to the H1. There we go. Okay, let's go 15. Daily pivot. Where are we at today? So we are off the daily pivot. Today's high. Let's remove these so it's a bit more simple to see. I mean, wait, what did you say? A buy off the pivot. Do you mean S1, the pivot down there? I'm not too sure what you'd be looking at actually here, to be honest. I mean, I would be more inclined to go short. We've got the bearish moving averages here. That was a horrible arrow. Bearish moving averages where you open below the pivot, 65% probability. We close below the pivot based on the probabilities of daily pivots. So yeah, I think the most likely outcome is actually we go towards S1 and possibly S2 throughout the rest of the day. But also, got to be very careful going into today and tomorrow. We do have the Fed. That will be a big event. So if you're not locked in, you could end up in some pretty dodgy positions. You know, for example, if you go short pound dollar, euro dollar, and gold, you're very exposed to the dollar. So just take some care. Every time Nick says we'll be the opposite next time you know it, that is an absolutely ridiculous statement. GPUSD, GPAUD. Okay, we've got some chart requests. We can go over those. Absolutely. Never seen gold so pathetically weak when it should be flying. Well, I've got to say, I don't think gold should be flying. I think the bears in the chat are right. I think gold should be bearish at the moment. I don't really see a reason it should be flying. Again, we do have the Fed tomorrow. That could change the narrative a little bit. But yeah, as things stand right now, I think gold's bearishness is warranted, really, or at least sideways. You know, the sideways range I think is kind of to be expected because we do have a little bit of a push and pull going on. We've been discussing this on my segments for the past sort of week or so, really. But we've got the fundamentally weak dollar, although the dollar is strong, granted, but the fundamentals behind the dollar not so great. So that's positive for gold. We came down to the 4,000 key level or round number. That's positive. That's a good psychological level where people might want to buy. On top of that, you've had a 30% discount, give or take. We're at a daily, weekly level of support. So I think there are people that are getting involved and being a bit more optimistic on gold based on those factors. But then we also look at the situation with the Strait of Hormuz in Iran, where yes, we're having some peace talks or a little bit of optimism coming in, but by no means is that resolved. So I think there are, again, that push and pull between people saying, well, we're not actually going to get the resolution. Oil is going to remain restricted. Inflation is going to continue to go higher. Yields higher. Fed hiking, negative for gold, positive for the dollar. So I think, yeah, there's definitely a mixture of things going on, which again, I think is reflected quite clearly in the price here of this just range bound price action we're having. There's really nothing to do. Hey, James, what's good? Jeremy, I'm good, my friend. How are you doing? Binance listed gold and SpaceX and finished them. Binance listed gold and SpaceX and finished them. Okay, right. I see what you're saying. Nikkei's bleeding. Yes, I was watching the Nikkei actually. I think we spoke about this yesterday, and I just didn't manage to get my position. So what I was looking at was obviously at the time this was the low, so I was looking to get in on the 50% retracement. I did kind of miss it on this wick. I just wasn't paying attention, completely didn't see it. So that was completely a missed entry, unfortunately. So I think the next opportunity really would be to take the fib from the new high to wherever the next low would be printed. So ideally, it would be something more like this. And the reason I would want to see the low right here specifically is because that would then align the fib, so the 61.8 and the 50% retracement, in line with the previous lows. So it wouldn't just be a fib pullback here, it would be a break and retest and a continuation type of pattern. So that's what I want to see going forwards. Whether that will happen, I don't know. So we do have the bearish moving averages on the H4. Something else to understand though with the Nikkei is the daily trend is very healthy. So we are still in this pretty nice bullish trend. We've broken below the daily 100 moving average right here. So it might be an idea if we could get some short positions into the 200 daily moving average before we see a continuation higher. That's the idea. If we end up breaking below the 200, we obviously then could be in for significantly more downside. So that's something to monitor if you are going into the Nikkei. James, can you show us a new setup for gold? No. It's not because I don't want to. I wish I could, but there's just nothing going on. As I said, gold is just sideways. There really isn't anything I can sit here and tell you about gold. I can't say we're in a bullish trend. I can't draw a fib here because there's no major previous highs or lows. You know, this is, I suppose, really, if we tried to force it, there would be some sort of idea like this, but even this isn't a fib pullback. This just doesn't work here. So really all I can tell you is that we are at a really strong level of support through here. We've seen the daily golden cross or death cross, again, terminology doesn't matter really. So based on sort of the technical side, I would expect gold to continue lower to around 3,500 potentially. But again, it doesn't really matter on the setup because we've got the Fed tomorrow. We've still got to see what's going to happen with Iran and the US and Strait of Hormuz. So it's really a, to be decided or to be continued type of market, really. I wouldn't say it's worth trading right now. I think Marco is right in terms of, I think I came in quite late, but I think he said something along the lines of it's just not really worth paying attention to gold. It's better to focus on some other markets right now. Bro's attached with gold. Yeah, it does seem like that. There's a lot of emotional attachment right now, whether it's good or bad. Bro, I'm going to get stopped out. On what market? On gold, I can't get stopped out because there's no stop loss. James got earnings week. Do we? Interesting. I don't really keep up with earnings. I probably should though, because I do trade the indices markets, but it's a really bad habit. I just don't really pay any attention to stocks at all. My view on Swiss yen, I would say yen pairs are warranted to continue higher. The Bank of Japan, we've got some data coming out for Japan. Actually, we've got unemployment rates on Friday, and we've got the interest rate decision by the BOJ. So the markets aren't expecting a hike in the next meeting, but we are expecting hikes going forwards. Now, there are people looking at that saying, oh, we need to buy the yen because we've got some interest rate hikes that are expected. Well, yes, but we've also got interest rate hikes by other central banks that are also expected. For example, the ECB is looking like they might hike into 2027 or in 2027. We've got the Bank of England that looks like they're going to hike 1 month sooner than the Bank of Japan. So it's not just a case of, oh, the BOJ is hiking. We've got to look at it from a more bird's eye view, if you will, on what other central banks are doing what. So Swiss yen specifically might not be the best option right now because, again, we are sort of sideways. We've got CAD yen that's doing quite well. Pound yen is not doing fantastically well right now, but I would still say it's a better opportunity than Swiss yen. So if you were looking to be a buyer, I mean, this is a very clear support level. We are still technically in a bullish trend here, but we are seeing a convergence here between the 100 and the 50 daily moving average. So it's really a case of what happens at the support. Do we end up breaking below the level of support and below the 200 moving average, or do we see a rejection to the upside? So again, this is actually more of a to be decided type of market. I don't see a setup yet. There might be a buy support or sell breakout type of idea. That's not really what I do, but that's really all I can say on that one. It's funny how people underestimate the US dollar strength and forcing metal longs. I don't think anyone's forcing metal longs. I mean, I am actually betting more significantly on dollar strength. So yes, I am buying gold, but again, these are tiny position sizes, these 0.01s, and I'm looking to hold these basically for as long as needed. You know, I don't care if it's a year, I don't care if it's a year and a half. Really doesn't matter to me. Whereas euro dollar, I've gone a bit heavier. In fact, very or significantly heavier on euro dollar with a bit more of a defined stop and a shorter term outlook on the US dollar strength, basically breaking above 102. So it's not as simple as saying, you know, I'm bullish on gold and that's it, because that's not really the case. It's like gold is a longer term investment style. Euro dollar is actually more of a short term expression on my bullish case on the dollar. Yeah, the thing is, Mr. Klexi, I don't understand that either. I mean, the thing is, when you've been on social media for a while, you know, as I said yesterday, I'm still a very small fish, but I've been doing sort of consistently making videos on YouTube for maybe 9 months, give or take at this point. And something I've noticed is people that quite often leave hate comments and these types of things generally don't have much going on. You know, there's people I don't like. I'm not going to go out of my way to watch the videos and leave dislikes and hate comments because I've got other things to do. You know, I'm too busy to care what other people are doing that I don't like. It's just a case of I don't like, so I'm not going to get involved. So typically speaking, someone that does leave those types of comments or interacts in a negative way generally doesn't have much of a life. I know it's a very cliche thing to say, but it is very true. But on the other point, where, you know, saying Nick's wrong, that really isn't a fair statement, I wouldn't say, because when you're making content, I do very similar content, actually, sort of daily updates or something like that. Data changes very quickly. The markets update, things change. So you could have, you know, a data release that might actually sway your bias to being long gold. You might not execute the idea because maybe it's not the full thesis to trigger you in, but it might lean you more bullish than bearish. So you make a video about it. It doesn't mean you're doing anything. It's just an update video. And then, you know, you might have something else that changes you back to being bearish and solidifies that idea a bit more. And then you make another update video. It's not fair to hold someone to an idea that they've said because it's an idea. It's not a signal. Again, you know, Nick sends signals, so it's fair to hold people accountable for that. But again, I think just making updates and coverage and those types of things, that you've got to put it into your own research and make your own decisions. I've been buying Microsoft whenever it dips. Fair play. Yeah, again, as I said, when it comes to stocks, I am actually very on the sidelines. I don't touch them. I don't really look at them. I have been contemplating getting the stock box, but again, I'm just so time restricted at the minute. It's not trying to learn a new market really isn't, or a new asset type isn't something I'm prioritizing right now. I would say the concern that I've got with a lot of these stocks like Microsoft, Apple, not so much, but, you know, OpenAI, SpaceX, a lot of these companies that are moving more heavily into AI, it gives me the spooks. And again, I've said this many times now, but AI, I think, is a fantastic tool. I think it is going to be the next revolution, you know, the industrial revolution times 10 at some point, not right now. You know, I think we're at a phase where people have implemented it, they're using it. You know, I use AI on a daily basis. I think most people do. But then you've got the more worrying case of companies replacing employees with AI. For the most part, I think that's actually been a total failure. I know most companies have actually had to rehire the humans back because AI wasn't cutting it. I'm not saying that's every case, but I think that's kind of the general thing that's been going on. And then you've got the revenue problem. You know, there was a clip I saw yesterday of Sam Altman saying that he has no plan and no idea how he's going to make revenue. He's made a soft promise to investors, but there's just not any idea on how they're going to do it. So how long can these types of companies really stay afloat until the money runs out? I don't know. Again, I'm not a stock guy, so I've got no idea. But these are just the things that give me a little bit of the spooks really around holding a lot of these tech stocks. They, you know, I want to clarify. I'm not saying they can't go higher. They could continue on the same way that they've been going. But yeah, I'm just cautious. That's all. James, you trade stocks? No, I don't. I've got an investment account where I do buy and hold, but not on a speculative thing. It's not a case of I'm looking at the earnings and revenues and PE ratio. I don't do that. I invest in things I like for a long term, and that's it. Yo, still short gold added on the pullback. Very nice. Good. I'm happy for you. Oh yeah. The gold trade was tricky. I was contemplating going in for a swing trade on gold. I didn't do it, and that's why I ended up in the DCA approach. But yeah, I think gold is a tricky beast at the minute because you know, it's the same thing I've been saying for the past week or two, maybe longer at this point. But I think there really are good cases to be a buyer and seller of gold. I don't think it's quite as simple as, you know, gold's bullish on the edge. Find, we buy gold. I think obviously you've got to, in this case, you've got to take in the context of really what's going on with the Middle East and inflation and central banks. You know, it's normally the case anyway, but I think it's super important in this case specifically because it's colliding with gold's fundamentals. Good morning, James. Good to see you. I'm just wondering if you would consider leading an intraday scalping program for A1 if Nick and the team ask you. Just shooting the idea, would love that. Intraday and scalping program, probably not. No. Intraday maybe, but scalping's not something I would feel comfortable doing really with people, just because it's very stressful. Yeah, it's not something that I don't really like scalping. I do sometimes, but there are days when you're scalping and, you know, you'll have a typical setup and it just won't work, and then you'll try again and it just doesn't work. It's just it's like, how do I explain it? It's like swing trading. You know, you might go on a losing streak with swing trading. It's frustrating, but imagine doing that where you have, you know, let's say 4 or 5 losses in a row, but it's all within an hour. It's just not fun, especially then if you're sat on stream or in a chat trying to talk to people and explain that it's just a nightmare. So no, I'm not going to do that. How do you open a 0.1 lot position for a year? Don't you have any financing costs like swaps? On what? What do you mean? That's a very blanket statement or a very blanket question. So you, first of all, open a position by clicking buy. But in terms of the costs, not really. It depends what market you're trading. Like dollar yen, you would get paid quite nicely to just buy and hold dollar yen with a 0.1 lot. But again, it's a very broad question, so I'd need a bit more context. Everyone hates gold, so now maybe the bottom's in. That's also a good point. Yeah, it's like when everyone's euphoric about silver, it's like the reverse situation. AI is not food. I'm glad it's not food. It's not good. Nobody wants it. I would argue against that. I think AI is very useful. I think the people that don't want it are people that can't adapt. You know, like for example, my career was as a creative. I was a designer, motion designer, graphics, live TV, that type of thing. That's what I was doing before trading. And that very quickly is starting to eat into my old creative job. But the thing is, it can be used to the advantage, or, you know, you can look at it as I was taking your job and just let it go and hate AI. I think it's going to be a big inflection point of people that can adapt and understand what AI is and how it can be used. And then there's the boomers that just don't understand it. And again, it's the next industrial revolution where people either lose jobs or they pivot and diversify into different things. Again, I'm not saying that's super easy. Obviously, you know, if you're specialized in one thing and AI just can do it in 5 minutes, that's going to be a problem, obviously. But then it's your job to figure out how you can move into something else or differentiate or, you know, figure it out. That's life. Nobody is forcing on being long gold. Those who have watched the market 2024, 2025, gold and dollar both maybe upsides, the market changes. Yeah. That's the thing. I think gold is very hyped at the moment. I just don't see the interest. You know, gold had a drop. You got people that are super bearish, super bullish. Just let the market do what it wants to do. It will figure it out. It will price what it wants to price. And at some point, I don't want to say this with 100% guarantee, but I'm like 99% sure gold will continue higher at some point. Again, it could be next week, could be in 6 months, could be in 2 years. I don't know. It doesn't matter. Buying micro slop is its own falling knife. Do you mean like micro strategy, or I'm not sure what micro slop is slang for. Maybe I'm being a boomer. I can short gold at 4,000 and use the money gained to mine gold. Interesting. You said you were doing DCA on gold and then showed a chart with 0.1 lot orders on gold. No, they are not 0.1. They are 0.01. So no, there is very little cost. There are costs for just the transactional costs, but there's no swap cost on the broker I'm using for gold. So yeah, it's a case of I'm just really buying and holding. But in terms of dealing with the costs, it's business. You know, I think swaps, you need to obviously understand them, and you need to understand where they come into play, but it's not a case of they ruin a trade. You've got to, look at it as a business cost. It's a case of, okay, I'm buying dollar yen, so I'm getting paid swaps. Does that then either allow me to just sit in the position and just collect the swaps? That's cool. Or can I use those swaps to offset another position that has negative swaps? So there's that way to look at it. But then there's also another way of, again, it's business costs. You can't run a business with no overhead at all. I mean, I'm sure there is something out there you could do it with. Maybe. I don't know. I don't think there is, actually. So yeah, you are going to face costs. There's no real way around it. I mean, there are some cases where you can use it as tax write-offs. I'm not going to go into that. I'm not qualified to talk about taxes, but I know in certain places, I think you can take your swaps and things like that. And if you've got negative swaps, it's a bit of a tax write-off. Again, not advice. Always check with your accountant. Hey, James, can you explain your Euro-Dollar DCA short that you posted yesterday on Instagram? Yes. So we'll go over Euro-Dollar because we do still have half an hour here. So we'll start with the Edge Finder. So Euro-Dollar was something I was looking at earlier, but something I was saying was I can't take it because Euro-Dollar, I'll start at the beginning. I wanted to be a buyer of the dollar, but the problem I had was we had pound dollar, euro dollar, Aussie US dollar. We had a lot of the dollar pairs reading bullish on the Edge Finder. So I couldn't really express that idea because it would go against a lot of my framework. Excuse me. So one of the criteria one of the things I was looking at was euro dollar, because euro dollar was the lowest score at the time. I think it was 4. So that was the interesting point. I was like, okay, if euro dollar flips back to neutral, then I can express my idea with a bit more comfort. That's exactly what happened. Eurodollar's flipped off the Edge Finder. It's not here anymore, so it's gone back to neutral. Okay, that's great. Then we can look at seasonality on Eurodollar. Hold on, let me just pull it up. Here. So what we can see is Eurodollar does have a little bit of upside into sort of start of September. So this is kind of what I was looking to price in, really, is adding positions throughout this period, looking for the historical move to happen again on the 10-year average, where we just continue to have this downtrend into basically November. So it's basically 2 months of downside historically Eurodollar. So that's one thing. Then we've got the visualization of that seasonal pattern here, kind of on the weekly time frame, where we come up to and create these lower highs, and then we come down towards not necessarily parity here, but on this one we came near parity. So yeah, it's basically a case of, okay, I'm pricing in the bearish seasonality. Eurodollar's flipped off the Edge Finder. We've created this pattern yet again. So I'm pricing in the idea, really, that I think Eurodollar could come down towards towards 1.035, maybe even lower to parity potentially. So there is these technical ideas. We've also got the US dollar that's just doing very well at the moment. I do expect the dollar to break above 102. So yeah, that's the idea. But then you've also got the other aspect, really, that one of the things I love to do is short Eurodollar with a DCA approach. And the reason I love to do it is because Eurodollar is quite a mean reverting market. It's a very liquid FX market, so it doesn't stay inefficient for very long. Maybe inefficient is not the right word, but when we have rallies in Eurodollar like this, if you can manage your average price properly, you can make money on this, on the correction. Same thing here. We have the rally to the upside and then a correction back down. So that's one thing. But on top of doing that, the longer you hold short positions on Eurodollar, you get paid swaps because of the interest rate differential between the ECB and the Fed. So it's a really beneficial trade to just sit through. But again, you need to really understand the dynamics of how to approach dollar cost averaging on a shorter term basis, because it's the same idea really of investing. You buying in incrementally, not just putting in the whole clip like you would with a swing trade. But then because you're trading on a shorter term time frame, you can have massive fluctuations in the P&L. Obviously, when I say massive, I mean in terms of price movements, not necessarily money. So you need to be able to manage the average price and figure out where you really want your average price to be and how you can execute that. And obviously where the stop out levels are. So that's kind of the idea behind it. But yeah, it's super simple, really. A consensus of 56 analysts polled by the S&P Global gives Microsoft a strong buy rating with an average 12-month price targets of roughly $557. The lowest target sits at $400. The highest reaches $870. Very interesting. DXY stronger? Yeah, I would also back that. The thing is, we need to be cautious going into tomorrow. Again, we do have the Fed, we've got the interest rate decision and the forward guidance. The interest rate decision is expected to be a hold. I think we are all expecting that. That's reflected on the CME Fed Watch tool as well. So the main event really will be the forward guidance as normal. So in this case, we need to watch the press conference, see what's said, see what questions are asked, see what the answers are to those questions. And that can give us and give the markets a very good idea of not just what we can expect, but what the Fed is exactly paying attention to. So, if they say, for example, the labor market cooled down a little bit, but it's okay, it's fine. But the main focus is inflation, then we obviously need to pay a bit more attention to the inflation data coming out. Obviously, labor market still matters, obviously, of course, but hopefully you get what I'm saying. So, yeah, that will be a big indication of what we can look at going forwards. I don't have an ETF account because I got no... okay, but you would now. I'm not sure what that means. Do you mean like an investment into ETFs or actively trading ETFs? I'm not following that really. Sorry, I'm just catching up with the chat, guys. That's why I keep going quiet. I'm just reading them to make sure I'm not missing anything that might be important. Can you check pound Swiss? Yes, we can have a look at pound Swiss. Absolutely. Would you short gold now? I would short gold. Okay, so fair enough. I don't think it's a case of having the courage or the confidence to do so. I think that really comes down to the reason. I think the statement you made about not having the confidence to short gold is more coming down to you don't know why. So trading never comes down to what you said about the I'm not sure. I'm trying to not say that word on stream because again, I think this is a PG-13 stream. But yeah, the whole idea when it comes down to finding a trade and having the confidence to take it, it comes down to knowing why you're in the trade. So of course, if I sat here and had absolutely no idea what's going on with gold, I wouldn't want to buy or sell because again, we're at support, trends bearish though. What do I want to do? So I wouldn't feel comfortable doing either. But because I understand the dynamic and the landscape behind gold, I'm actually happier to go in for this type of approach with the ladder. So yeah, it comes down to, again, understanding. So if you've got no idea, then obviously you're going to have those confidence issues. So pound Swiss, we were looking at pound Swiss not too long ago, and it looked quite good on the short term. I'm not sure if it's still on the edge finder though. Let's see. Pound yen, CAD yen, New Zealand yen. Pound Swiss is still bullish, or very bullish with a score of 7. So yeah, okay, nothing's changed. Let's go back here. So yeah, it's just exactly the same idea. Fib from the low to the high. The fib lines up now with the previous structure on the left. So I'd be looking for a retest into this level, pull into the fib, break and retest of previous highs. Moving averages here on the daily are turning bullish. So continuation higher does look like the most likely outcome. So super simple. The problem I've got with pound Swiss though is just the higher time frame trends. And we've spoken about this quite a lot recently. It's the same on, I think, all really of the Swiss pairs, that if you go to the monthly time frame, it's a very bearish trend here. you could make money on the pullbacks to the upside, but you're much more really on the right side if you just go short on these pullbacks rather than trying to buy into them. And then the same thing on the weekly. So what we can see here is we quite often break above the weekly moving average, the 200, but then very quickly we will actually just break below and continue this higher time frame downtrend. So what I'm really looking to do on pound Swiss is actually not be a buyer. Or maybe if the opportunity comes, I will be a buyer. But what I really want to do is actually wait for pound Swiss to get towards its weekly 200 moving average, either touch it, break above it, or whatever it may be. Just show some sort of rejection around this 200 and then get into short positions to continue lower. One thing about this, though, is the idea to be a buyer is very good because obviously you got the fundamentals there, you've got the daily and the 84 trend there, and you do get paid swaps. So being a short-term buyer absolutely makes sense. I think that's a good idea. The short-term idea makes sense on the higher time frame, yes, but the downside is you do have to pay swaps, and pound Swiss swaps when you're going short is quite expensive. So it's definitely not the easiest trade to sit through, because if you end up in just a range, you can end up paying quite significant amounts of money just to sit through nothingness. Yeah, I'm still learning without ETF account, just stocks. Fair enough. Okay. Ball out. Not seen your name in a while. Hope you're well. Take a look at Coco. What am I looking at here? Weekly looks actually very bearish. Thing is, though, again, with Coco, with agricultural commodities, I'm not that knowledgeable in. However, I would absolutely say this looks like a bearish setup on this weekly. Why you often say you don't like 38% fib? Because the fib I use, which I don't know why the 38 is still there, but this 50% retracement is a very measured and expected pullback. So when there's a trend, we're obviously pricing in something new. So when we get a pullback by 50%, we're then, how do I even explain this properly? Essentially got a 50% better price to continue pricing in or continue the trend. So a 38% level then gives me 3 different areas where we could potentially have a reversal. That's not good enough for me. Because I'm a manual discretionary trader, I don't want to have a lot of decisions to make. So I don't want to have all of these different fib levels that I could potentially look at. So if we just put this back to the default, look at this. So we've got a 23%, we've got 38.2, we've got 50%, we've got 61.8. We've then got 78. So we've got all these different levels on the fib that could be used, but there's no system there. I don't think this is a trading system, because you've got so many different options. Eventually, you're going to get one of them to hit. But I think that's more of just a guessing game. So do you enter on this one, or do you wait for this one, or do you wait for this one, or do you wait for this one, or this one? Which one do you actually wait for? And, let's say you always wait for this one to get hit, but then this one gets hit and it continues lower. Well, then you're going to change it to actually, okay, I'm going to enter on this one. And then the next trade, it comes all the way up to this one and you entered down here. So I don't think this is a good enough system. So that's why I use just the 50% and the 61.8%, because they are, a 50%. It's a halfway movement. That's good. I like that. And then my whole system is reduced to one zone. It's just this box. And that's it. So if we don't get that, there's no trade. If we do get it, then there's a trade. That's as simple as it is. Okay, what else do we have going on? What about gold? We've discussed gold quite a lot today, Ivan Bart. So feel free to rewind and have a look at that. I really don't want to discuss gold anymore. I'm getting a bit sick of that market. Pound Aussie. Yeah, we can take a look at Pound Aussie. Why is the Nikkei falling? Any change in fundamentals? Yeah, we can take a look at that one as well. What time frame is the best one for the RSI? That's not a real question, my friend. There is no best time frame for an RSI. The RSI does its job on any time frame. 50% is a lovely number. Exactly. Yeah, it's just a very good, nice number for a pullback. You could think of it as like a sale. So, if you wanted to buy, we've used this analogy before with gold, but if you wanted to buy a car, let's say, you wanted to buy a car, but price is now up here, and you know that, you know, price has just been going higher and higher and higher, well, you're going to really just want to wait for a 50% pullback or a 50% discount, which is, you know, very common. So like here, this was completely randomly picked. I actually drew this for just an example, but you can see this is a 50% pullback, actually touches 61.8 and then continues higher. So the dynamic of 50% pullbacks happens all the time. They're not all valid, of course, but that does happen a lot. Right. So what were we looking at? So pound Aussie. Let's go back to that market right here. I'm fairly sure pound Aussie was bullish at one point. Is it still there? It doesn't seem to be. So the problem is at the moment, pound Aussie's not got a fundamental reading on the edge finder. So there is no sway for me. I don't want to be a buyer or a seller. So daily time frame is still bearish. We came up to the 200 moving average, rejected this area, and now we're continuing lower. However, we are in a little bit of an uptrend here. You know, we've got these higher lows getting formed. We've got these higher highs. So a bit of a mixed signal on the daily. The H4 did attempt to begin an uptrend here, and then obviously very quickly failed that, and now we're continuing lower. So I think the base case really would be to go short, and that's basically just on the technicals. Again, the fundamentals aren't there, so there's nothing for me to do here. But yeah, based on simplicity, I would go short, or at least go in with a short bias. So the Nikkei, yeah, the reason we're seeing this one fall is because we are seeing Bank of Japan hike expectations continue or persist, really. Not in the next meeting on Friday, but going forwards after that, we are looking at potential hikes by the BOJ. And we are seeing, yes, the fundamentals on the Nikkei at bearish as well. So yeah, there isn't really much signal to be a buyer. So what I'm looking for is the Nikkei to create a low here around 60,000, roughly, pull back into the previous support here on the H4, fib pullback, and then the continuation lower. So that's the plan. I've got no real intention of going long at the moment. One thing we were looking at though is this daily time frame here. So this could actually just be a bit of a larger pullback towards the 200 daily moving average before we then have a bull run to the upside and continuation. So that's something to keep in mind. So if we do get this H4 pullback to the 50%, I'll look to take this market down to around I don't know, so somewhere within this sort of zone here, wherever the 200 ends up at that point. And then either I'll trail stops to break even, I might just fully take profits. It really depends on exactly the situation at the time. If we end up breaking below the 200 though, there is a likelihood that we actually end up continuing to run significantly lower after that. So the 200 daily is a big inflection point. Either we bounce off here and continue higher, or we break lower, and that will be a pretty big bear catalyst in my opinion. So short term, bearish, longer term, a little bit mixed. Is again, just kind of waiting to see what happens. Makes sense. Good stuff, Samuel. I'm glad that made sense. I think pound is weak right now, to be honest, with new PM. It won't take much for it to keep dropping. Yeah, there is optimism still around the UK. I don't think it's going to last that long, but we'll see. So within the UK at the moment, we're seeing a lot of talks about nationalization, and you know, a lot of things that on paper do sound really good, or on TV or on the radio or whatever, sound good to the average person. But then from, you know, when you actually think about them, it's a case of how are they going to finance it? You know, our government is pretty poor. We're in massive debt. Taxes are already extremely high. So how are they going to fund any of the stuff they're planning to do? And that's where the problem comes in, because if they do it, they're either going to have to go into more debt, which they can't afford to do, or they're going to have to raise taxes, which realistically the average person can't afford to have it happen, because the cost of living is already so high. So even more taxes is going to make the cost of living crisis even worse than it already is. So I don't disagree with the plans they want to make. I think they are good, but I don't think it's the right time. I think they have to create the infrastructure to allow them to do that later down the line. And you know, I'm not an economist by any means, so I don't know exactly how they should do it, but I just know what they are doing doesn't really make that much sense, or what they're planning to do doesn't make much sense in the longer run. On summer vacay, sell in May and go away, ball out. Love to hear it. Hope you're enjoying your vacay, my friend. Can you look at CDN dollar? CDN dollar? Do you mean Canadian dollar? Never heard it's referred to as CDN. In what market? Do you mean the CD? Do you mean the Canadian dollar on its own, or do you mean a specific market for the Canadian dollar? What do you think about gold? Bearish on gold. If I had to say, I would stick on the bearish side. Many countries are selling US treasuries and gold to defend their currencies. Yeah, well, yeah, it is what it is. Right. So we've got about 20 minutes, 15 minutes, give or take. I'm just thinking if we've got anything else we want to cover before I head off. I think we've got Alan coming to take over. That is normally the way these go. We've got Marco, then me, then Alan, then Nick, I think, then Alan and Marco at the same time, something like that. Excuse me. Oh, Canadian to US dollars, right? You probably could have, yeah, you maybe could have said that in a bit of an easier way for me to understand, but that's okay. We move. So US dollar CAD. Yeah, this is a tricky one. So what we were saying yesterday seems to be the case. So what we said yesterday was, well, what we have in a very simplified way, we have the US dollar that catches a bid on escalations within the Middle East. And then we've got the Canadian dollar that also catches a bid because of the oil prices that increase, and then the Canadian dollar benefits from that by proxy. So that's a dynamic that we've got to account for. Is actually, escalations are really beneficial for both currencies. De-escalations are actually quite negative for both currencies. But what we actually see here is the US dollar does better on the escalations that we had here. On the de-escalations that we had here, actually the US dollar worsens, the Canadian dollar takes over. So it really comes down to what do you think is going to happen? If we're going to see de-escalations, I would expect the US dollar CAD to continue lower and maybe correct some of this left side. However, if you're looking at escalations, you think this situation is going to get worse, I would actually look towards being a buyer of this market. So that's the situation, but I think there are actually better ways to express it. I think dollar CAD looks good, but I don't know. It's just, I think, again, yeah, I would say there are better opportunities really than dollar CAD, because what we've also seen is sort of a reversal at this weekly level of, or daily, weekly level of previous support used as resistance now. So we're kind of just in a bit of a granted higher time frame, but there's not really much direction here. We could argue the daily's bullish, but yeah, overall, I'm not seeing a huge amount. So I wouldn't really want to be a buyer into this previous high. I think I would really rather wait for the break and retest to continue higher, but then the upside is quite limited, really. There's not a huge deal there. And then on the downside, I would need to really wait for the break and retest here. But again, the downside is a little bit limited. So there are definitely short-term opportunities. Of course, that was a daily time frame. But yeah, I think dollar CAD's probably not the optimal market, in my opinion. Nas is in some BS. Why is that? Let's take a look at the Nas. Nasdaq here. Oh, interesting. We finally had the break. We have been talking about the break. So this is good, actually. So what I want to see now is the retest of this level, and then we can go short. So I'm actually going to set an alert here. So then we can look to do that exact idea. So now we've seen this level break. I think the next real stopping point for the NAS is 26,000. I don't see any stopping point here on the left in terms of technicals anyway that could provide any type of support whatsoever. We've had the H4 moving averages here flip bearish. Let's see what the daily is doing. Actually, just to backtrack a little bit, now I'm looking at the daily. We do have the daily 200 moving average that could act as dynamic support for this to continue higher. I don't see that as a fantastic idea, though. I do lean more bearish, and I've been talking about my bearish idea for quite a while. But yeah, we've got the Fed that's expected to hike rates, not in the next meeting tomorrow, but after that one. We do have still a little bit of risk-off sentiment regarding the Middle East. It's, we have had positive developments, but is that going to follow through? I don't know. No idea. So yeah, I wouldn't be opposed to going short in this situation, actually looking for a continuation lower. Simo, hello. Good to see you. Hope you're well. I'm doing fantastic. Thank you very much. Indexes seem to be selling off this week. Do you think Fed comes out with soft tone or dovish action on Wednesday and we get reversal? It depends what they want to lean on. So they could argue that inflation has come down, but I think that would be disingenuous because yes, inflation did come down, but it came down whilst, we had de-escalations in the Middle East and then it picked back up again. So I'm not sure they would use that as a crutch to really take a more neutral to dovish tone. We did also see the labor market come down. So there is that side of things, but then again, we do still have the Middle East. It's a bit more up in the air. I don't think they could really warrant taking a dovish stance, to be honest. I think they at most have to be very neutral, more of just a wait and see, that type of approach. So yeah, we'll see. I think base case, in my personal opinion, of course, I've got no idea. I could be completely wrong, but I would expect neutral with a slight hawkish lean. But again, I could be completely wrong. Live already? Josh, my friend, you're late to the party. We've been doing the early streams for about a week now. We start the streams towards London session. So basically, the streams have just been shifted around a little bit. So we have a much more reliable schedule these days. So if you go to the A1 site, you look at the live stream schedule, you'll see we start with Marco at 11:30 GMT +1. And then I come on, then Alan, then Nick. Alan and Marco come back on, then Tiger. And then we have Simply Forex come on. We have Chris come on. I think those guests are a little bit more up in the air on times and when and things. But yeah, the core schedule, this sort of layout is repeatable on every week pretty much, unless someone's ill or doesn't turn up or whatever it may be. But you get what I'm saying. I digress. Woohoo, crash, perfect. Yeah, it would be good. And I always feel a bit bad saying things like that. It's like, a crash is not really good. A lot of people lose money in crashes, but for me, it's fantastic because I'm actually sat on quite a lot of cash at the minute. I'm about 30% actually invested. The rest 70% is actually just sat on cash waiting for the comeback to the downside because I'm really sure it's going to happen. So when we get down to the 200 daily, I'll start investing a little bit again. And what I'm going to do is really use the daily and the weekly as reference points. So I'll invest at the daily 200. I'll invest a little bit more at the weekly 50, the weekly 100, weekly 200. And then if we start breaking below, I'm going to invest a lot more heavily. Again, it really depends on the dynamic, what's happening. It might not even reach this level. I'm getting a bit ahead of myself, but hopefully you understand what I'm saying. The reason I say that The reason I say that is Trump really is angling for lower rates. This might be an opportunity to play the narrative. Yeah, well, I mean, we've already heard Walsh say that he's not under political pressure, really. He's not going to let Trump influence him. How true that is, I don't know. But I think lowering rates or taking a dovish stance is unwarranted. I don't really see that as a good idea. I always say, I'm not as intelligent as the people at the Fed, by no means. I'm just a retail trader doing my best. But from my perspective, I don't think it's really a viable option at the moment. The new schedule is crazy. You haven't been here for a while. Well, Josh, you need to get to know, my friend. You need to come in a bit more often. Watch our ads. Speaking of ads, you can get up to 50% off prop firms if you scan the QR code in the corner. I need to do the call outs a bit more. I'm not a professional streamer yet. But yeah, the schedule is really cool. It's a lot better for me personally anyway. I think it's better for the viewers. You get longer and a more consistent roster, which is cool. So yeah, I do think Nasdaq will continue lower. I don't really see any support for it. I think the next support is the 200 moving average. After that, if we break below, we're very obviously, or I would say very obviously, coming towards 26,000, sorry. And then if we break below there, we're in for a little bit of fun. That could be a very interesting time for us. So keep your eyes out. James, you need to look at Aussie New Zealand for shorts again. Maybe, actually, yeah, you might be right. We have created a bit of a lower high here on the daily. The H4 has established a bearish trend. Weekly doesn't really look very convincing. We're still kind of just sideways. But yeah, the lower time frames daily and H4 do look quite good. So yeah, maybe I need to do a bit more research onto this market and we can see maybe if we could justify going short once again. Yeah, it was a good idea at the time, but it didn't really do anything. So I had to cut that one a break even. But yeah, it was worth an attempt in my opinion. Lost a little bit of money on the swaps, but nothing crazy. So we are seeing oil down a little bit recently, or this week, I should say. However, we are seeing a bit of a recovery here. So we came down to the 200 and the 100 daily moving averages here. Oh, sorry, the H4 moving averages, showing a bit of a rejection, bullish candle on the H4 here. So same thing I normally say, I would expect this gap to get filled. So it wouldn't be a surprise to me at all, really, if oil comes back towards the $90 mark. But then the question is, does it continue higher from there? Maybe. I couldn't sit here with any confidence and tell you yes or no. I don't think that would be fair. It wouldn't be a shock to me if it does continue higher, but we'll see. So 5 minutes left. What do we have to discuss? The DAX is getting a bullish reading, actually. I didn't notice that earlier. We could take a look at the DAX. Where is that here? German 30. So actually there might be a buying opportunity. I quite like the DAX, actually. I think this might be the next opportunity I've got. So it could actually be a pretty nice diversification away from going short on the US markets and go long on the on the European markets here. So what we see is the 50% retracement lines up with previous highs. So as I'm always talking about, we get the break, retest. We could actually see this gap get filled, pull back into the 50% retracement, and then the continuation higher from there. And of course, as we just looked at, the DAX is bullish on the edge finder. So I do like this opportunity. So I'm going to add another alert here. And I'll add this to the blue list. Sorry, I've got a bit of hay fever today. That's why I'm constantly scratching my face. So I'm not on drugs. I know it might look like that to some people. I just want to clarify. So DAX is looking okay. Pound yen I'm already in, but it's not going too well. CAD yen, hindsight, was a better opportunity or a better option for me. But that ship sailed, so there's nothing I can do about that right now. UK 100, don't really like that market. It's just a bit ugly. Pound dollar is still getting a bullish reading, but I'm not really in favor at the moment of I'm not really in favor at the moment of selling the US dollar. So I think I'm just going to ignore that one for now. Interestingly, silver's getting a bullish reading of 4, but because I'm already buying gold, I'm not really looking to be a buyer of silver either. So to be honest, it seems like I'm quite flat at the moment. I think the DAX long, Nikkei short, maybe a Nasdaq short. But yeah, that's kind of all I've got at the minute. You say the FTSE's going up. We'll take a look at the FTSE then. It's unlikely I'll take it. But yeah, we'll take a look. So, excuse me. Yeah, typically, actually, I have to say, and I don't like it. We see the setup here. This would have been perfect. Pull back into previous high, retest into the fib. But yeah. Anyway, hindsight's always 2020. So, I think with the FTSE, what I would want to see here is basically the same setup. So pull back in towards this 50% retracement, lines up with the previous highs on the left. Obviously, fib from the low to the high. We've got the bullish trend on the H4. The RSI is a little bit overbought, indicating we might want to see a bit of a pullback here. So yeah, actually, technically speaking, this does look really good. And we do have the edge finder. So I will take back what I said, and I will set an alert on the FTSE for potential long position. Because when the FTSE trends, it does trend quite well. The problem is when it doesn't trend and we're stuck sideways, the chop is just horrible. So yeah, I'm very cautious trading the FTSE because generally speaking, it can be quite tricky. How bad is the hay fever? Today, not that bad, actually. It's just a little bit of an itchy nose. But I'm kind of grown out of it a little bit. When I was in school, it was really bad. I used to have to go home because my eyes would go all puffy and really bad. Nosebleeds and all that fun stuff, proper nerdy behavior. But yeah, as I've gotten older, it's not that bad anymore. I just have to take some pills and I'll be all right. Okay, so got 2 minutes left. Gold hasn't really done anything. Let's just do a quick check-in. Eurodollar continues to actually not do anything really. A little bit of a move lower, but yeah, generally speaking, there's nothing really interesting today. Pound yen's doing nothing, and CAD yen is still at entry. So yeah, in terms of my positions, there is no update at all. So fun stuff. So to recap, possibly a FTSE long if we pull back into the 50% retracement. The DAX, same idea. Maybe a long if we can fill this gap on the left, pull back in towards the 50% retracement, retest prior highs. CAD yen really fumbled the bag on this one, sadly. But yeah, nothing I can do, unfortunately, here. But I'm going to keep an eye on it. Euro New Zealand. We were looking at this earlier last week. I didn't take it because, again, this is a 38.2 retracement. It's not really my ideal entry. I like to see the 50% and the 61.8%. So if we can see this 50% come into play, so we can see something like this, I would happily take this short position. having said that, actually, when we were looking at this, the Euro New Zealand was bearish on the edge finder. That doesn't seem to be the case anymore. So actually, I might scrap this one, unfortunately, but that might have to be the case. And then the Nikkei. So I need to see some sort of bottom form on the Nikkei, pull back into the fib, retest previous lows, and then continuation lower. Just bear with me. I need to send Alan the link for the stream today. Sorry, guys. Give me a second here. There we go. Okay, so I don't think there's any messages we've missed. I don't think there's any markets we've missed either. I think we've got a good portion done today. I know yesterday was a bit of a yap fest. So if you were here yesterday and you got a bit sick of it, today should have been a bit more valuable for you. But anyway, I'm just going to wait for Alan to get into the back room, make sure he's ready, and then I'll head off and leave you guys to enjoy your day and the rest of the stream. But yeah, in terms of markets, I think we're in a little bit of a complicated regime at the moment. We've gone back to being in a bit of indecision. We've gone from Iran situation is escalating. Everyone, simple stuff. Got oil buying up, being bought up. Sorry, we've got inflation expectations up. Central banks going towards hiking. Very simple. Then we've got we had de-escalations. We had the reversals, re-escalations, and now we're back in sort of de-escalation regime. So tricky one. Anyway, guys, Alan is now ready to take over the show. Don't go anywhere. Thank you for being here. Enjoy the rest of your day. Stay safe. Don't get margin called. And I'll see you all tomorrow.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching today. Hope you're doing good. Let's see. The shiny yellow metal says, "Hi, Alan. Can you answer the question I asked James, please?" Let's see. Let's see the question. I think it's this one. Gold sells at the retest of the 4,040 level to take it back down to 4,003. Any thoughts? Okay, so we're seeing, I think you're asking about a reject of 4040 to 43. Let's see. Let's find gold. Let's go to the lower time frames. 4040, which is here. 4040. And then taking it to 43. 43. Okay. Here's my thought process. I really have a hard time kind of like predicting or forecasting kind of like smaller movements like this. But if I'm looking at this, then, the 40-40 area, give or take, kind of lines up with this trend line here. So, you got the break retest. I think that as long as we hold anywhere above this, we're still pretty good. So yeah, probably. But, this is to me is kind of like a shorter time frame, kind of hard to predict. So I like more swing trading, so looking for the broader move. And I also like general areas, but I'm not too precise as well. So like whenever it comes to an entry, like for example, something on my radar would be let's say Australian dollar, right? I want to be somewhere within this general area, but not really too specific as far as being super precise with the entry and stuff like that. I hope that makes sense. But for gold, a fluctuation, let me go back to the gold chart. A fluctuation within here, I think, is very possible. Very, very possible. Let's see. So we have gold down today, 1.2. We have dollar a little bit green on the day. We have oil flat. Anything new has happened? Question mark. Anyone in the chat? Let's see. Let me pull up a new Google Chrome. Financial Juice, Edge Finder, Currency Strength. That's pretty much my tech stack. All right, let's see. OPEC stuff. Looking to pause hikes or output. I'm sorry. Nothing really. Nothing really. The big one is going to be Fed tomorrow, which I would imagine that the market is pretty quiet today. That's usually the case where you have some sideways quiet markets right before a big event like the FOMC, which we expect no rate hikes, right? So a rate hold. However, the forward guidance and everything is going to be very important. If there even is any forward guidance, I need to remember that that's kind of back in the past. There's really no forward guidance, no clues. Pretty data dependent, but we'll see. We'll see. Which, if we are data dependent, that could point me more dovish if we're data dependent. All right, depending on the CPI, PPI, and the jobs report. But as far as for today goes, we do have consumer confidence, which is coming up after the market opens. Australia has some CPI, which is looking to cool. Their quarter is looking to cool. Their year over year is not forecasted. There's no analyst expectation there. Trimmed mean CPI is looking to rise. So we'll see. We'll see. Big day for Australia. Let's see what the top setup brings us here. See if anything has changed for us. I'm curious to see what gold is doing. So gold is still bullish, which I like. I love to see that. Kiwi dollar is still bullish. You still have the Australian basket doing quite well. So Aussie yen, Aussie dollar. Is there anything else, like anything Aussie CAD, Aussie Swiss? No. So it's just those two. Okay. So maybe I take that back. Euro yen, pound Swiss, pound dollar still bullish. Pound yen. Yeah, I'm still liking some pound. However, again, look at this pound dollar here, breaking below that 61.8% retracement level. That's kind of that last line of defense that I had in mind for bulls to take it over. So now that we are breaking below this level, there's a good chance that we can probably see a flush lower. Is that going to happen today? Don't know, because it's probably a quiet market. So unless something happens on the UK front, then we could see something. But I do expect a little bit of a nothing day today. Yields, what are they doing? They're kind of softening a little bit, but still elevated nonetheless, with the 10-year up there, 30 to 2. Okay. So what I'm going to do is I'm going to start prepping for tomorrow. I need to prep for tomorrow. Where's my notes app? Let's see. I'm going to do this, and then I need to start prepping for tomorrow. So we're going to do the dovish case and then the hawkish case, and what I'm looking to do in either or. So if I'm dovish Fed, then my gold trade still is alive. So gold trade, I'm going to hold that. If you have, what else could I do for dovish? I like Australian dollar. So let me look at Australian dollar, and then let me look at Aussie CAD. Okay. Aussie Kiwi. Okay, so we're seeing Aussie Kiwi and Aussie CAD start to pull back too. Aussie Swiss, it's very extended. I don't expect any kind of a crazy pullback. I'm going to delete this one off my list. But Aussie CAD, Aussie Kiwi. So this is contingent on what happens with Australia. So this would be, Aussie hot inflation plus dovish-ish Fed. Okay, in that case, I like AUD USD long. I like AUD Kiwi long, and then I like Aussie, what was it, CAD? Yeah, Aussie CAD long. If we get, yeah, I'm gonna keep that like that. So the Australian inflation this evening here is gonna be a real tell for me. So if they come out with, I don't know, if their CPI comes in cool across the board, and that kind of takes some of that that hawkishness or that strength out of Australian dollar, so then I would pass on that one. So for now, if we were to get a dovish kind of outlook tomorrow, I'm gonna hold my gold short. I'm gonna hold that one. And then what could I do? Dovish. Then I'll look for pound. Then I'll look for pound dollar long. That's what I would do. If we get hawkish, what I would do is euro dollar part to the short side. In fact, let me just check the technicals first to see if it's still in play. I'm gonna move my zones over a little bit. Yeah, I could like euro dollar short. If we get a pullback into this general area here somewhere like this, I'll take that. So I'm gonna put euro dollar short. What else is weak though? I feel like that's the only thing I have on mind. Here, I'm gonna do this neutral. And then I'm just gonna type USD. Dollar CAD still neutral. Dollar Swiss is neutral. Oh, no. I was gonna say dollar yen, guys. I was gonna say, well, like if you have a weak dollar tomorrow, you know, because of the Fed, I would like to go long dollar yen, but at these levels, I wouldn't want to. It's risky. It's risky. It would be like super intraday, and I don't even want to play that game. I would rather wait for a meaningful dip. So dollar yen to the upside wouldn't be the case. I might have to go dollar CAD. Let's see what dollar CAD's doing. Yeah, dollar CAD. This would be a buy high and sell even higher. So dollar CAD to the long side would look good as well. USD CAD long. I wouldn't short gold. I would only buy it at this point. So not looking to, you know, usually we've kind of been in a thought process where like if you have, you know, super strong dollar, given the circumstances of elevated oil, elevated yields, then short gold, and then vice versa, long gold. At this point in time, I'm kind of just only open to going long gold. I'm not really shorting it. So I'm going to keep that as that. So dovish case, right? We continue to hold. Oh, I'm sorry. Gold long. Definitely mistyped that. Dovish case for the dollar. Hold that gold long and maybe look to go ahead and go long pound dollar. In the hawkish stance, I would like to go ahead and go short euro dollar and long USD CAD. And then given tonight, depending on how Australia goes out, then maybe I can add some Australian into the mix. And then I would do, in the event we have a hot inflation print with Australia plus that dovish Fed, that would make a really, really good case for the long Aussie basket, which I really loved earlier this year, which would be long Aussie dollar, Aussie Kiwi, Aussie CAD. I think those are my top picks there. So I'm going to keep that here on the screen. Of course, not financial advice. Never, never, never. But that's kind of what I'm looking for. Let's see the chat here. I see a lot of things coming rolling through here. Can you please check oil? Could there be a bullish case because of the war tensions? Absolutely, there could. In fact, one thing that I'm watching on oil is what happens if we hit that 200-day. So we are seeing a little bit of softness there. So look, this is it. War tensions eased. Price in June, prices went lower. Then we had a re-escalation. Prices went ahead and picked back up. On the U.S. oil chart here specifically, you have like this bearish trend line that it seems like we reacted to. Now we're falling here, but the real test that I have in mind would be anywhere within this 200-day moving average to see if this is a true kind of prices cooling off here, or is this a trend reversal where you had a pickup and you had a retracement into that 200-day where buyers step in and then you take it higher. So this is kind of the case where like both can be true, right? Because if you're looking at the bear case here, this could be a pullback for the bears and they take it lower, Or for the bull case, if this is the trend reversal, this could be a leg up higher, a pullback to the downside, and then the bulls take it over at the 200-day. So it's really kind of like iffy anywhere in between this area here. Let me see. Anywhere within here. It's kind of like both can be true. So the choppiness there, not the best, not the funnest, not the cleanest, but definitely there could be a bull case. And I'm looking at 200-day moving average, me personally. So that's kind of my thoughts on gold. Simo says OPEC plus likely to pause oil output hikes after September for the rest of 2026. Yeah, we'll see. We'll see what happens. Hopefully the Strait of Hormuz is open by then, Citadel has come out with a preview calling for the Fed to surprise markets with a hike. But Rev, you're in the camp of no hike this week. I don't think we'll get a hike this week. In fact, let's go to CME Fed Watch 2 and see if anything has changed. But from my understanding, as of yesterday, we had a pretty solid chance that there was going to be no hike this week. So it's hey man, 33%. Unless something odd changes today, that's kind of interesting. But 66% chance, most likely than not, there's going to be no hike. But then moving down to the probabilities tab, you do see at least 2 hikes for until December of 2026. So that's definitely in the hawkish side of things, especially considering where we came from. 2026 was like, yay, how many rate cuts are we going to get? And now it's like, now how many rate hikes are we going to get? Could oil be seen as a hedge for gold long? I don't know about a hedge, but I do think that if this thing continues to drag on, that a long gold or long oil position could definitely be a wise one if you get a good enough discount. Maybe not buying it up here, maybe waiting for the 200-day or even lower. Like if you can somehow get back into the 68 territory, that would be a really good risk to find opportunity to the long side, where you have all of this to the upside to capture. And then, at that point you're at the pre-war levels, right? So you can just put your stop somewhere within here. But yeah, I think that going long oil, if you get a good enough discount, would be perfectly fine. In fact, I wanted to kind of do that, but I got greedy and I wanted a deeper pullback into this green zone here where price was at before. And we were pretty low there, so that's my fault. But yeah, that's kind of my thought process there. Goldman's expecting a few hikes. We'll see. New Zealand US dollar long if dovish. Great question. So it's getting a bullish reading on the Edge Finder. I'll give you my outlook. So right here, Kiwi dollar bullish, and if you take away this, you just look at the Kiwi dollar isolated, like right here, it's still getting a bullish reading as well. So it looks quite well. Here's my problem with Kiwi to the long side. If you look at this chart, you are below resistance and below the 200-day moving average. So for me to justify a long opportunity from a technical side of things, I would personally like to see a break and then we trade above this level. This level turns into support and we are above the 200-day. Versus if you look at Australian dollar, you are above that level of support and above the 200-day moving average. So you have this as like a cushion to the downside, if that makes sense. So the Australian dollar looks a little bit better here technically versus Kiwi. Now, if we do a fib, I'm curious to see what this looks like. Okay, so the Kiwi still, if you measure this move out here, you're still above the 50% and the 61.8% retracement level. But, personally, again, like I said, I think Aussie dollar looks a little bit more cleaner. It has more support underneath it than the Kiwi does, whereas Kiwi has technically no support underneath it all the way down here, unless you're looking at the Fibonacci retracement levels. Please, can you do U.S. oil? What's your take? News from Reuters came and all Gulf states agree that Iran would collect some fees at Hormuz. I think when it comes to like the fees and stuff like that, I think that just gets priced in, for the longer term. I think it's just a matter of like free movement, free passage in and out, and the war is actually over. So I don't think fees can be necessarily a bad thing. Remember, this is only 20% of the world's oil supply. And then there's also alternative kind of distribution paths being implemented now that will take some time, but The idea is that it's supposed to make us less reliant on the straight. So I don't think fees will be, the most worst thing ever. Euro pound short. Yeah, let's look at that. Euro pound short. Ooh, you brought something to my attention. Euro pound short. That kind of looks kind of clean if we get a bump up to here again. This was support for a very long time. If you see this right here, how many times is this, guys? 1, 2, 3, 4, 5, 6 times of support. We finally broke below, and when we broke below, we went straight down. So a pullback would be really, really good. Let me measure this out here from here to here. We're at the 50, so we have some room to go higher if we need to. And then from here to here, yeah, you got some good move. In fact, if you measure out from this leg here to this leg, you have the 61.8% retracement level, kind of right at that level of support turned resistance. So I really like Euro pound. I have an alert here already, but I didn't know it was getting this much of a bump up here in recent times. So that's good. Ellen, if the FOMC rates come as expected, is it considered as dovish for the dollar? I think that likely than not, the rate will be what's priced in, which is no rate hike right now. The biggest tail would be if there's any forward guidance at all, any hint of anything like that. That's kind of what I'm looking for. And then also too, the beauty is we don't have to guess whether like the next one is going to be a rate hike, or is it dovish or bear or hawkish, because we could really look at the US 10-year yield as the meeting is progressing, right? So as things are being said, as it's moving along, you will see bonds move accordingly. So if you see something super, super hawkish, for example, something that the market wasn't expecting whatsoever, hawkish commentary, whatever the case may be, then you would see US 10-year rising there along with that. If you just reflect back on previous FOMC meetings or even like previous news releases, like for example, that NFP report, that was a big miss, right? You can look at the reaction with the US 10, and it's real-time feedback as to what the market's kind of interpreting. So I like to look at that. You could also look at CME Fed Watch tool as well. So you can just refresh. If you go to CME Fed Watch tool, you go to the left-hand side here on probabilities, and you refresh that, then you could see these numbers shifting in real time alongside the US 10. So that's what I would say. Like that's kind of what I would look forward to as well. So usually when I'm watching those things, I'm looking at this right side tab and just seeing what the US bond yields are doing. DXY retracing today to rise tomorrow. Maybe, man. Maybe this next line of defense would be 102 though. We're tapping back into this level here. We're stalling out, which is as expected. Like I said, like usually the day before a big day like FOMC, you do see a little bit of a quiet market unless something out of the ordinary comes out. But it's as expected. The market's just waiting for clarity, right? That's kind of like the name of the game, is like you don't want to jump the gun and front run a position or front run an idea that really hasn't been confirmed or denied yet, right? You would rather just wait for the actual data, the actual event to pass through, so you have some clarity, and then you trade after the fact. And so that's why markets get a little bit quiet right before something like that. So that's what I'm going to be doing, and it seems like that's what the market's doing as well. Yeah, the same idea as USD CAD long. Yeah, if you do get a strong dollar, if you do have some kind of hawkishness or some kind of verbiage like that, and the 10-year is telling us that some more hawkishness is getting priced in. You look at CME Fed Watch. If you have that kind of story happening, then I like dollar CAD to the long side as well. I think Marco is in this position, so congrats to him. You are it seems like this was the pullback, right? If this is the bottom here and we continue higher from here, it seems like this was it. We didn't even get to the 38.2% retracement level, which is interesting, but it seems like this would be it. And I would definitely be open to buying here, and then probably looking to target, the recent highs and beyond. If it just continues in that direction, who knows? But yeah, this is definitely a strong market, dollar CAD. And this makes me even more excited because the CAD, Canadian dollars, is quite weak there. And so I'm kind of, fingers crossed, looking for an opportunity on Australian dollar, and Aussie CAD was phenomenal. So, and we are getting a little bit of a bump lower. So we'll see what happens. Ball out. Yeah, man, I'm out, man. You got to look at the live stream schedule. Here, I'm going to drop it into the chat so you can bookmark it and everyone else can bookmark it as well. So you can see who's on at what time. It's in your time zone. It's really awesome. It looks really, really fancy too, I will say. So go ahead and look at that. But Nick comes up right after me. So in about 6 minutes or so, you'll see Nick and you can ask him all the questions you would like. Let's see. Metals are getting a little bit crushed today, though. I will say. Stock market. I didn't even look at this, guys. Nasdaq is just creeping lower, huh? Drifting lower. I kind of like to see that. Are we gonna get the pullback that we deserve? Let's see. This will be a 7 to 8% pullback. I like that. What? Ball out's a troll. Ball out, I'm not even gonna respond to that, man. I have no idea. I really don't. It's okay. Nasdaq. I like this level here. I like anything 26,000, 26,800, anywhere within this level where you have the 200-day moving average. I really like that. I think that would be a pretty decent pullback by the dip opportunity if the environment is there. Is S&P doing the same thing? Let's see. No, S&P is actually just drifting sideways. So Nasdaq is the one pulling it down. Interesting. Long Microsoft, Oracle, Netflix. Is it good? I actually like. Well, Microsoft seems okay. Let me see. It's below the 200. Let me see. If Microsoft, this is kind of what I'm looking for. Something like this. So we're some ways away. This would be a good level in my opinion. Anywhere here in Microsoft. What is that? 10% away. And then beyond that, that looks like a pretty good level. Netflix. Oops. Let's see. Netflix is a different story. It's actually giving you a good pullback too as well. If I'm just looking left here on the chart, anywhere with it here looks okay. You're at the 61.8 almost. Yeah, you are getting some discounts and stuff. I would really wait for Nasdaq to really just kind of slow down, let it do its thing, let it breathe to the downside. Let the air pop a little bit more, see how far it wants to pop, and then from there go on. Let's see. Anything else? FTSE going up. Looks like you guys are watching. Oh, that was for James. My apologies. Thoughts on EuroCAD? Let's look at EuroCAD. Let's see. Yeah, a little bit of a tricky chart. It's very choppy. Is Finder telling us anything on EuroCAD? Let's see. EuroCAD. Neutral, not really doing much. The price action is also very choppy as well. Not the best, man. I kind of don't like it. It's also below the 200-day as well. So don't know if this is tilted to the downside. Yeah, probably would stay away from EuroAcademy personally. I don't know if you have any positions open already, but yeah, nothing crazy there. Thoughts on Google? Thoughts on Nvidia? Big companies, man. Very, very big profitable companies. If you can buy a discount, get a discount, meaningful one on any of them, then proceed wisely, I would say. But those are all very great companies that I think everyone should own a piece. All right, guys, we got Mr. Nick here in the background getting ready to take over. Thank you guys so much for watching my portion of the segment. We will be right back today. If you just go to a1trading.com/live stream, I'll be back on in about an hour or so. So we'll go ahead and give it back to Nick here. And thank you guys so much for watching. Again, I'll be right back soon.
Don't go anywhere. Don't go.
My bad, man.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show.
Good morning, everybody. Welcome back to another live stream. Thank you for being here. We got stocks making a move lower here this morning. Not only stocks, though, precious metals making a move lower. I did get stopped out of my gold position. Did not work out. Cut the trade. On to the next. I wanted to also I'm building something. I was finishing up coding something here this morning. I wanted to show you guys. We're building some heat maps on the website. Check this out. So we've got a whole bunch of them that we're building. If you're not already using our website, we are just like boat loading a bunch of free tools over there. It's a1trading.com, bookmark it. We have tons of free tools, resources, lot size calculators, futures trading calculators, prop firm drawdown calculators. Like, we have a ton of stuff over here. Market heat maps. This has been taking up a lot of our time, just putting together free tools for people to check out and use. Of course, again, we'll just keep supporting them because obviously it's a great way for people to come check out our site, which also supports us because, of course, we're sponsored by various prop firms and brokerages. So if you're looking for that, there's also huge discounts and comparison tools. So we are building like crazy on the site. It's a lot of fun. Anyways, this is my latest creation here is this heat map, so we can kind of see like which things are moving where. Nasdaq down here this morning. S&P 500 as of a little bit ago was still flat here. Bitcoin, etc. So nice little overview of what's going on. And then also you have like the 30-day change or 1 week change. So kind of fun. Anyways. Let's take a look at what we have got going on here this morning. So I mentioned I was long gold no longer. We kind of failed to hold this gap. We gapped higher on Monday night or Sunday night, and then proceeded to try. We held briefly here around this area and then rejected it, fell through, and then pretty much we sealed the gap and kept going. So there's just, from a technical perspective on the 4-hour chart here, I just didn't see the follow through that I was looking for. Maybe I'm wrong to get out at this time, but I'm just going to step to the side and watch what happens here at this 61.8% retracement zone. I also just didn't love the way this has been rejecting this area, filled the gap. And the big thing there is when we filled the gap, my thought process is, okay, if we come down into that area, ideally that should act as technical support. It did not. So gold to the downside here this morning. That's just going to get me out of the trade, and I'll reset and reconfigure whether or not I want to take another stab at it. So that's gold. If we're taking it Nasdaq, just my goodness, tech stocks have been under siege here recently. If you take a look at the Nasdaq, we are officially, it's like hard to even believe it that we're seeing this, but you've got the Nasdaq down almost 10% here. It was just narrowly missing a 10% pullback, which just very barely tagged the 38.2% retracement, led lower by what we saw lead it higher. The semiconductor names have been under a lot of pressure here. And what's really interesting about this move is that it's like the market itself was narrowly led higher, like the semiconductors, right? SMH, we always address this as kind of our proxy. The semiconductors led the rally higher, and the semiconductors are also now dragging things lower. Semiconductors had become, I was hearing, up to 20% of the S&P 500, which is kind of an insane number if you think about it. Because semiconductors, they're an incredible, obviously they're like needed for everything AI, but also there's like this tug and pull where if semiconductors are getting really expensive, that is a weight to a lot of the companies that are paying them to use it. And now we've got this new narrative that is genuinely, I think there is some worry here with the whole China stuff, right? China has a couple AI models and things that are showing up, and they're quite impressive. And so what happens is that they're selling their tokens, right? So like if you pay for a subscription to ChatGPT or Gemini or Claude or whatever, you're paying for tokens, you're paying for your usage, right? Well, China, the worry that's kind of stirring around in Wall Street right now is that, well, China is coming online with some really great AI models that are offering their tokens much cheaper. So the compute costs, the running of AI, the usage coming down in price in one area, the theory is that could drag prices down in all areas. And if prices come down for memory, for semiconductors, for usage, for AI spend, that brings down the kind of U.S. Semiconductor dominance. So the question is, do I think that this has standing power to completely destroy the semiconductor world? No, but I do think that it's very reasonable that when you look at semis and historically speaking that they have 30 to 50% drops, not so infrequently, I look at this and I say, okay, well, you've got down 20%. Could we go 30? Sure we could, right? Take a look at your moving averages. 30% would get us right on down to that 200-day moving average. So that I heard, if you've been tuned into the stream for a little while here, we previously had Forex James on. He was talking a little bit about how on the Nasdaq he sees a little bit more downside coming, and I don't necessarily hate that call. You have uncertainty about the Middle East, uncertainty about the interest rates potentially getting hiked. I saw something that was Bank of America thinks that we're going to get a surprise hike, which you get a surprise hike tomorrow. The market is going to be like, hold up, that stance is very clear. That's more hawkish than we thought. So there is that worry. You also have tech earnings, which so far, Google, Tesla, the idea of increased spend on CapEx, on AI spend, the market does not like it. And there is a very good chance that Meta, Microsoft, Amazon are going to reiterate continued outsized spending on AI. So China is good at copying and finishing the manufacturing industry. And I mean, that's kind of what semiconductors are. Semiconductors are a commodity, right? They're like, it's sort of the new age manufacturing to manufacture compute. And if that goes the way of China, and it is a much more affordable thing, it's very, you can understand why semiconductors are just historically very cyclical. They're commodities in the sense that, it's a lot of different competitors can come in and encroach on the space, right? A lot of people can make semiconductors. A lot of people now, it's not that easy, because obviously Nvidia has like some sort of a moat with their products being the best and their software being the best. But hey, you know what? If you're talking about how much profit potential is in being the salesman of semiconductors to all the need that's out there for it, you can bet your bottom dollar that there's going to be lots of competition. So anyways, yeah, my thought process on the Nasdaq is I wouldn't hate to see the thing pull back. I saw Alan also previously talking about maybe the 200-day moving average. Same with James. 200-day moving average, you have, that's what is that? It's about another 4.5-5% move away. That's to me very, very plausible that we could see that pull back. Would I short the Nasdaq? I don't think so. But let me just look. There are times where I'll short indices, but it's very infrequent. It's very rare for me to want to do that. It's a tough trade to try and short indices because they inherently typically go up over time, right? They're kind of intentionally, they go higher, right? They're an index. It's a basket full of companies that are growing quickly. So you're trying to bet against that is really difficult. So I probably will not do that. I don't have enough conviction to short the indices. But do I think that they could continue lower? I think so. I modestly think that the indices are going to continue to pull back. And I do think that the S&P 500 will also continue to pull back if this pain in the semiconductor trade continues to last. I don't know how it does not drag with it being 20% of the S&P 500. I don't see how it does not, continue to drag. Now it's the other sectors that are holding up really well. By the way, we have a sector heat map coming to the website as well, which I'm really excited for because I do like to watch individual sectors. So stay tuned on that. But yes, the NASDAQ especially looks heavy, and it's very, very interesting. I think NASDAQ year to date is up like 7% now. But you have to think, when you're looking at year to date NASDAQ, actually, I'm sorry, you're looking at like a 10% gain. That's actually still impressive. 10% gain this year for the NASDAQ, still good. But remember, we were at 22%. You had a 22% gain on paper this year that has gotten kind of hit hard here. And again, I would not be surprised if we did continue to pull back into something like the 26,000 level. Now, I'll also say that if we get that kind of move, I'm probably buying. Well, I am going to be buying stocks. I like to buy stocks anytime, the S&P 500 is down like 10+%, which the S&P 500 is not down 10%, but some of the individual, I really like software. I would not mind if software IGV continued to pull back a little bit more. So this has gotten crushed. This is obviously software companies. That's, my world here at A1. We build, we are a software business. So there's lots of individual names in here that I really like and will be watching myself. So we'll have to watch. But the big name obviously is just keeping an eye on semiconductors. Good morning. Good morning to you. Good morning to everybody here in the chat. Thank you for being here. Nick, would you take the Dow if it breaks out of the bull flag in the daily chart? Thank you, Lee, for the question. So Dow is also in neutral territory for me. If I'm looking at the Dow Jones, though, I have to say the Dow looks incredibly impressive. This market is very uniquely AI sensitive or AI, like it's gone back and forth where if you're AI focused, it's a positive for your business. And then there's times where if you're AI focused, it's a negative for your business because the AI label comes with inherent lots of spending. So let me give you the easiest example in the book right now. The most popular and praised stock in the market right now, in my personal opinion, any guesses for which one I'm going to say? the most popular stock right now is Apple. Why? Apple, by my own saying, I've criticized Apple in the past for being slow to the AI race. And now I'll say this. Whoever made the call at Apple to not join in on the spending frenzy that all of the other Magnificent Seven companies are doing, Tesla, Amazon, Google, Microsoft, I have to say, Apple is, this is easy to say with Apple at all-time highs and the largest company in the world again. But here's the thing. Whoever made that call to not go berserk on the spending is very, very smart. They decided, the company, obviously, this is intentional. They didn't, try and run into building their own large language model, making their own, everything, and spending a tremendous amount on data centers and semiconductors. And they've opted out of doing that. And in some ways, I was like, hey, you guys, you're the biggest company in the world. You should be dominating AI. The move now seems to be from Apple, the 2000 IQ play is that they are going to be the purveyors of AI. They're going to be the platform, the distributors for AI. They're not going to be the ones to pay for AI. Does that make sense? So their theory seems to be, let OpenAI and Google and Grok fight for the best AI model. You guys have at it. We will, on the other end, probably partner up on Siri with like Gemini, or partner up with OpenAI and let that best model win. Let them spendaholic themselves into a oblivion, and then we'll put that on all of our platforms. Like kind of brilliant. So, do I want to buy Apple here? Not at all. It's so expensive right now because what I just explained is known by everybody now. Everybody's like, Apple might have done the 2000 IQ play here and might have been the smartest one out of the group by not spending. Literally, they might have won the game by not playing, because all the other big companies are, look at them. Look at Google, down. Microsoft, super down. Meta, super down. Tesla, don't even get me started, super down. Like, all these companies are going crazy spending money, and Apple has elected to not spend theirs. And the market is absolutely loving that decision to have their free cash flow not get waxed by all the data center spending. And I'm not saying, like, it's not certainly that Apple's going to win in the end, because nothing is ever certain, because maybe Google is actually making the correct investment for spending all this money. Personally, I think they are. I think they should be spending money. But Apple has uniquely identified that it is the platform for AI, not the builder of it. Gosh, just so smart. Maybe that's Tim Apple from the 3-point line. I don't know. He his final play was, hey, we're not going to like dump all of our free cash flow into AI spending, and the market loves it. So, we'll see. But I have to say, I gave this pitch why I think Apple looks phenomenal right now, and then I proceeded to say I'm not buying the stock. Why? Well, because even though I think that story is great, the problem is everybody knows that story is great, and they price it accordingly. So if Apple goes on a dump to the downside, like, for example, Meta, Microsoft, Google, that's when you want to, in my opinion, that's when I want to, not you, you don't do anything I tell you because this is not financial advice, but that's when I want to buy a stock, is when people don't like it anymore. When everyone likes a stock, it's easy to buy the stock because you're like, oh, it's everyone likes it, it's going to keep going. But that's the problem, is it gets really expensive when you do that, right? If everyone likes something, it gets priced dramatically higher. If people don't like something, like, I actually think Meta is in my personal opinion, a really nice longer term stock buy here. I could be completely wrong. Like I said, I'm not telling you what to do with your account if you own stocks, because Meta could go down another 5,000% from here. So don't, just because I think something doesn't mean it's going to happen. I'm often wrong. But I do think that from a risk reward basis, I really like Meta to the upside. So anyways, I know I'm talking a lot on stocks here today. It's because the stock market's down, and that's when I get more interested in stocks, is when there's discounts out there. I don't know about you guys. Like, what's weird to me is that when it comes to stocks, people like to watch and think about stocks when they're up. When it makes sense, because people are like, hey, my stocks look good. But to me, the only time there's anything to do with stocks, if you're investing or if you're kind of longer term in nature, is to look at them when they're down. Like, I'm not walking into the store when they advertise, hey, everything's at a premium price right now. I'm trying to walk into the store when the discounts are happening, where they got like their fire sale going on. That's when I want to go shopping. Same thing in the stock market land. But for some reason, most humans, like, I don't really understand that psychology. Most humans do the exact opposite in stocks. They want to go buying stocks when they're at the absolute highest point. I mean, it makes sense to a beginner's mindset. You're like, stocks are going up right now, I need to be in stocks. But to me, but that's kind of where the experience of, like, you don't want to buy them when everyone's buying them, because it just, the entry price is high. Anyways, check out this. We don't talk about this this market all that often, but it has become a very popular thing to discuss in recent times. This is the Korean stock market. They are very concentrated in memory. You have like Samsung in here. You have a bunch of ginormous semiconductor memory names. 11% down, guys. Like, this is what I'm talking about when I say, like, semiconductors, where you can get lots of excess returns, you can also get lots of excess pain. Okay. This is kind of like silver. I remember when silver and gold were moving up, I had people who were saying, why are you even looking at gold? Silver's making such a better return to the upside. And again, one of the most common mistakes traders will make is that they will focus on returns and not consider risks. Silver got absolutely devastated this year. If you are the unfortunate soul to have bought silver at the highs, down 55%, half of your value in what is supposed to be safe money, right? Precious metals, by the way, they are just as volatile as stocks. They can be so devastating. So please understand, there's nothing safe in markets. Everything is risky if you size inappropriately. Everything can be traded if you size appropriately. So anyways, speaking of sizing and being wrong and risks, I mentioned this earlier in the stream. Gold here did stop me out, so I'm no longer in the trade. And you know, to be honest, I was looking for the follow through after yesterday's intraday pullback. This looked very promising. I was like, okay, we're good here, likely going higher. Did not happen. Rolled over. Dunzo. Got to get out of there. And when I look at Edgefinder, I believe gold is still a bullish reading. But let me look at something. I'm going to look at the daily chart. Yeah, this is losing its. So the Edgefinder uses a very simple calculation for trend. It uses a 3 and 14-day moving average. It's a way to gauge kind of 4-hour chart trend, because we have daily close prices. So we calculate it using that 3 and 14. Anyways, short-term momentum here has kind of faltered, with this potentially looking like a lower high. If we close below here today, then I would not be surprised at all if we're going back down to the lows in gold. I don't have a short idea. I don't have a long idea. I'm just going to watch and wait on gold, especially, guys, with the Fed meeting right around the corner. That may give us a little bit more clarity, but I'm going to keep an eye on this. I would like to see, from a technical perspective on the daily chart, you know, we had a nice start here, but we faltered. We've come back down. And this leaves me too much confusion to like have a strong idea of which direction we go. Right? You have a very range-bound chart here on the daily. My thought process is that we would head up and at least retest this 4,200 level. We did not. So that theory is gone. I'm just going to wait prepare for the next setup. And yeah, the other one I'm in, which is also not going very well, by the way, is oil. I went long oil yesterday here. And this one also has not been a promising start, although it's a very small size for me. So I'm not too worried. If this thing breaks lower, then I'm just going to cut this one as well. But it is what it is. On to the next idea. Oil, let me just see where we're at with oil score. We may have, let's see, oil, yeah, back down to a +1. So we had briefly some positive readings here, July 24th. I mean, we did have a little bit of a pop, but so far not looking great on the oil long idea. So if that gap, my theory is we might come back, close the gap, continue to move higher if geopolitical escalation takes place. But if it doesn't, then again, stop out and move on. And the thing is about stopping out on an idea should not be painful or scary to you. If the idea of getting stopped out is unbearably painful or something that you can't possibly embrace, then your trading system is flawed. Because here's the thing, whatever trading style you have, you're going to have strings of losing, like you're going to have losing streaks, you're going to have drawdowns, etc. If that due process, the idea of taking a couple false start trades, is too painful and too unbearable to you, your system, your risk management is messed up. So here's the thing, like I could lose 10 trades in a row and keep trading. It's not going to kill me, right? Because I size my trades down small enough that a 10-loss streak, which by the way, if you have a 60% win rate, ready for this? This is an eye opener for maybe people who are, kind of newer to this stuff. Let's say you have a 1-to-1 risk reward and a 60% win rate. In this event, if that is your stats, right? Did you know that if you trade that system long enough, you are virtually guaranteed to have a 5, 6, 7, 8 loss streak in a row? Now, again, holding all else equal, ready? We are locking in, guaranteeing that we have a 60% win rate on a 1-to-1 risk reward basis. No question, mathematically, we have a strict mechanical in your favor edge, right? That's the first part. The second part that is also true, that is a true statement. You have an edge. Okay, 60% 1-to-1. That's your first statement. Your second, you are guaranteed to have 5, 6, 7, 8, 9, and 10 streak losses. You have a system and an edge. You are also guaranteed to have that number of losses. So here's the last part. This is a really good system. Really good system. 60% win rate, 1-to-1 risk reward ratio. If that's your system, that's a wonderfully profitable system. Where people mess that up, first of all, this is a hard system to find, but let's say you do have it. You have that system. You have to acknowledge this is guaranteed mathematically to happen, right? Punch it in on any of your favorite probability calculators across the internet, and you will confirm what I'm saying here. If you have a 60% win rate, 1-to-1 risk reward basis, you are guaranteed to have at one point 8 losses in a row. So beginner traders will look at someone who has 5 losses in a row, or they have multiple trades in a row, or they look at their own system, whether it's someone else or themselves. They'll look at someone else's system, they'll look at their own system, doesn't matter, and they'll say 5 losses in a row, bad trader. Which is pure and utter ignorance. That is just, as my friend here in the chat, John, says, it's just statistics and mental stuff. Exactly. But see, that's the thing, is like the Dunning-Kruger effect. We've been talking about that a lot on the channel here, is the idea that when you first start in something, you think you're a genius, and then you come to realize how difficult something is, and you slowly actually get good at something. A lot of traders, if you told them, hey, I have an edge, I'm a profitable trader, and I took 5 losses in a row, their brain right here, thinking that they're geniuses, would say, you're an idiot and a bad trader. I would never have 5 losses in a row. And then people who are very successful and get this stuff right over here, they'd say 60% win rate, 1-to-1 risk reward ratio, 5 losses in a row. Statistically, that's going to happen. You see the difference? If you can get your brain to think like that, you have a chance in trading. But a lot of people don't think in probabilities. They just chase whatever's working now. And when it stops working, they switch strategies. They blow accounts. They're back to square one. And they're watching someone else on YouTube because they're like, yeah, I tried that strategy. It didn't work. And I don't like doing this anymore. So I'm going to switch. Right? That shift in mindset, thinking in probabilities, is really important. So with that said, that's me coping with my loss because it's just another in the book. But it's important, like actually walking through that exercise and remembering if you have a system. That is also, by the way, last point on this, that's why you size your trade so small. That's why you try, like, you're going to inevitably have that doldrum where you are in a 5, 6, 7 loss streak. And if you risk too much, that streak, which is inevitable and guaranteed to happen eventually based on the statistics we just discussed, you're going to blow up during that time. So if you know something is statistically going to happen and you still risk inappropriately, you are dooming yourself to blow up your account someday. Does that make sense? Anyways, that's what I've got for you today. A little bit of a risk management thought process exercise. Nasdaq continues to sell off. I'm going to watch gold today. If we get, if we get something more promising forming in price action, if we can get above 4,200, start breaking higher, then I may take another stab on it. But for now, just going to wait. With the Fed meeting right around the corner, I want to be patient on it and just see what happens. If you do get a surprise hike, which is apparently an increasing probability, Bank of America or one of the big banks put out that they think there's going to be a rate hike this week, a surprise hike. Market's not necessarily expecting that, but it could happen. So if that happens, gold would certainly not love a surprise hike with more guidance of more rate hikes. So I'm not saying I think that's going to happen. I'm just saying it's a possibility. So please understand that volatility is very much potentially there here going forward. Guys, in just a second, we are going to let Alan Perez take over the stream here again. He's back for his secondary segment here. Real quick before I do that, just a reminder that if you are not already using Edgefinder, if you're not using our software, our tools, or if you're interested in getting access to our VIP group, get access to the trade alerts we're sharing, the chat room community, etc. All of that is on super sale right now for our summer sale event. If that is something that you're interested in, scan the QR code that you see on the screen right now, or click the link in the live stream chat to speak to our support team. We have a real, we have real staff members who are handling people who are interested in joining access to the VIP group or getting access to Edgefinder. Simply scan that QR code or click the link in the live stream chat. They can also, last thing I'll say on this, they also can set up payment plans. I know a lot of people have been taking us up on the payment plan option as well so that they don't miss the sale, but can split up the cost to make it very low cost month per month. So if that's something that you're interested in exploring, QR code or live stream chat right here. With that said, up next, Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, everyone. Once again, hope you guys are doing fantastic. As Nick said, go ahead and definitely take advantage of that 40% off sale for that summer sale. Guys, markets are going to heat up. We have FOMC tomorrow, so there's going to be plenty of opportunity there. For those that are newer to the stream, this is a way for you to integrate sentiments, fundamentals, and technicals into your trading Very, very simple. So the algorithm pulls every single relevant data point that influences an asset's direction, and it gives you a score, right? Bullish or bearish or neutral. So you can stay away from that. But definitely take advantage of this. This is a very, very helpful tool to scan for the best top setups page. So with that, also to go ahead and join that Telegram channel as well. Link right there in the chat. It is completely free for you to do so, and it is straight up free value for you. You have bonus content here, update on positions that Nick has. You have analysis. You have, again, discount codes as well for you, whether it be the Edge Finder, whether it be prop firms, all that good stuff. All of it is here for you for free in the Telegram channel. So definitely go ahead and sign up for that. Kier, hello again, my friend. Hope you're doing well. Nick, gold broke the bullish trend line. Let's go ahead and look at gold here. I heard Nick talking about it here. I am going to continue with my position. And the only thing that would really cause me to get out of it prematurely, besides hitting my stop loss, would be tomorrow, right? If Nick talked about the probability or the potential, I would say, of a surprise rate hike. If you were to get a surprise rate hike, well, that would definitely cause some repricing to be done in the dollar, in definitely in gold as well, to the downside. And so that would be kind of the only way that I would get out prematurely there. But I do like this broader level. Mine was more of a longer term kind of swing to position trade as well. So I have my stops way below structure here, and I'm looking to kind of just let this price floor kind of get solidified, and hopefully we see a bump up higher from here. So we'll see. I'm curious to actually get your thoughts on that. So we've had a lot of things happening as far as oil prices and yields go leading up into this FOMC event. We had at one point, right, we had all of the data points kind of hinting at a dovish kind of stance, right? You had lower oil prices, you had weaker NFP, you had lower CPI, lower PPI. The fundamental data was kind of pointing in that direction. However, as of recent times, you have a re-escalation, oil prices coming back up. So with all of the mix, what do you think the Fed was likely to do? Do you think that there is a possibility of a surprise rate hike tomorrow? If so, type 1 into the chat. And if not, if you think that it's going to be a hold with some neutral to dovish commentary, go ahead and type 2 into the chat. I'm curious to know what you guys' thoughts are. I think the consensus will be pretty mixed here. I can see the case for either direction, if I'm being honest. Ref says 2, neutral to dovish. Babu says 2. John says you would get in again. Okay. Redex says 1, surprise rate hike. There you go. Kier says 2 as the CME has those numbers. Let's look at those numbers again, see if anything has changed since I was here about 30 minutes ago. It was at 33, now it's at 31, but still within that, broader range there. Okay. I think that I think it'll be somewhat neutral. I'll be somewhat neutral. We've seen oil or lower oil prices in the past, considering this day today, 3 days. You had some kind of a Halton ceasefire, whatever. I think that Washington team take that and kind of help justify like a neutral stance. I don't think there's going to be any rate cuts. I'm not on that camp by any means. I just think that we have a higher, we just hold for some time. That's kind of my thought process. The timing isn't right for a rate hike, I would say. Especially if you can somehow find oil back into the 70s, whether it be 79 or 76 area, I think that within itself could be, allowing the inflation to kind of stay a little bit capped and at least not trend the opposite direction. In fact, let's look at that. Let's go to Edge Finder, top status page, and then just get an understanding as to what the Fed is looking at. Okay. Let's look at Epic Pen. Let's look at the inflation in the US. So we had, I remember this vividly here. So we had cooling inflation, and then we saw a trend in the complete opposite direction, and we went way up from here. Okay. Now you have this again going on where you have inflation cooling, but that's just one print. Okay. You don't want to just take that and run with it. You want to see an actual trend to the downside. So what I think the Fed might be wanting to do is say we're going to hold rates and we're going to see if this lower inflation print is a true trend to the downside or if it's a fluke. Okay. If it's a fluke, then you see elevated inflation pop again. And then that could, at that point, I think it would make sense to do maybe like an insurance rate hike, one more rate hike to kind of keep this kind of capped off. But if you do see the next one come in lower again, and this continues to trend lower, then I think the Fed is in a good spot to just hold rates, not jump the gun and start cutting rates. But I think they're in a good spot to hold rates and let inflation do its thing. This is CPI. Let's go to PPI as well. Same thing, right? You had a trend higher here in PPI. Then you had one print that came in lower, and it was a good print to the downside because PPI was coming in higher than the forecasted consistently. Okay, you can see here that the forecast was over here in this dot, and it came out over here. You can see that the expectation was at this dot, and it came out kind of right there as well. This one, the dot was here, and we beat and came in way lower. So I would like to see a continuation of that trend as well, and I'm sure the Fed would be in the same thought process where you have a verification of, is this actually cooling lower or is this a one-off fluke just because you had that one moment in June where you had lower oil prices, right? Because you had lower oil prices here, and so that went ahead and translated into lower prints. But now you have prices of oil elevated once again. So this will be a really good test, in my opinion. So that's kind of my thought process there with that. So I'm thinking you have a rate hold. Really tricky to get any forward guidance out of them, and then we'll see from there. That's kind of what I'm expecting. But you never know. If you were to get, let's talk about this too. If you were to get a surprise rate hike out of nowhere, out of the blue, well then this level 102 likely holds like sand, and you just blow off top, and then you will wait for a break, retest, and then look for a position higher. That's kind of what I'm thinking. But we'll see. You've had in recent times leading up to the event some things that kind of point at like some better outlook things, like for example, oil prices trending lower once again, the halt and strikes with the US and Iran. So those are things that the Fed can look at that moment and say, you know what, things are improving. Maybe it's fine to hold, but we'll see. Everyone feels, and all the other data is just trouble. Okay. 30% on rate hike and 70% on rate hold. Absolutely. That's what we're seeing here on CME Fed Watch. So I'm going to be trusting this here. And this is, for the most part, very, very accurate. But again, you never know, right? There's no more forward guidance. There's no more clues, or they're trying to kind of go in that direction. And so if you get something surprising, that could be a way for them to showcase that. How crazy would that be? Where they're saying like, yeah, we're not going to give you any clues. It's going to, you guys are going to be blind. And to kind of drive that point home, they deliver a surprise rate hike. That would be crazy. That's some Bank of Japan stuff. Bank of Japan is very like that. Like all of their meetings and stuff like that, it's tentative, which they end up happening, but they're tentative and they're very they love to surprise the market. So we'll see. So looking at Aussie CAD, waiting for that to push lower. Aussie Kiwi as well, getting softer. So ideally, get some more of that. Aussie dollar looks quite good to me. I'm not gonna lie. But again, I don't want to jump the gun here because although it looks really good, we're getting a pullback. You're near that area of support. The edge finder is telling you that it's a bullish reading. This is the thing, right? Imagine if I take this trade to the long side, right? And I'm like, all right, this is a good trade. Let's go. And I take the trade. But then I don't wait for the news release to come out tomorrow. I don't wait for the meeting. I don't wait to see what yields are doing after the meeting or during the meeting. If I don't do that and I don't wait and I jump the gun, then I can take an unnecessary loss. It's better to just wait. And I know that sometimes it sucks to wait, but it's kind of the best way to go about it. There's a reason why markets get super quiet right before, is because a lot of people don't want to jump the gun and gamble on what the outcome could be. Do not trust in the data. think Dario doesn't trust the data in the chat, guys. That's my thought. That's what I'm gathering here. Okay, but most of us think that we're going to have what the market expects, CME Fed Watch Tool, which is a rate hold, which is good. I'm kind of in the same camp as well. I'm kind of in that same camp. I'm curious to see what happens with DXY. I wonder if it's the same situation that we saw with 100.5, where you tapped into it, you could say twice, and rejected it to the downside. I'm curious to see if this trend here is running out of steam truly, or if it's really just continuing higher. We've had a lot of green days for DXY. In fact, I'm curious to know from a sentiment side of things. Let's go to COT data first. Latest COT. Okay, dollar was bullish. Let's get COT data history. Yeah, man, we're still seeing some accumulation. Look at that yellow line there to the upside. Accumulation on DXY. Let's look at one of my new favorites. Let's go to net options volume. And DXY US dollar. Very bearish, but it's losing some steam there. So that's interesting. Marco, how are you, man?
Hello, Alan. I'm doing well. What about you?
Pretty good, pretty quiet as expected, right before a big day tomorrow. So I'm just kind of going over some possibilities that I'm looking for. I did this in my earlier segment, which is just some possible scenarios that I would like to play in the event of, you know, one thing that's interesting is we do have Australian inflation today. So like if you were to get Aussie inflation and then a dovish Fed, which is a unique scenario. So it's very specific. Then that could promote me to go long Aussie basket. But if you just get the generic, like nothing happens in Australia and you're going solely based off of the Fed, if we're dovish, so continue the gold long and pound dollar long, I would take. If it's hawkish, euro dollar short, USD CAD long, which I think you're already in USD CAD long, right?
Yep. I'm in that. What do you think? Is it gonna be a neutral event, hawkish or dovish?
I think they're gonna hold for sure. That's kind of what the market's priced in. And then as far as forward guidance and kind of clues there, I think it's going to be tricky just because he doesn't want to give you any forward guidance. But I do think that he kind of uses what's been happening recently. And when I mean recently, I mean like in the last 2 days where you have oil prices cooling off again. The strikes were halted. So I think he kind of pivots off of that and kind of uses that to like stay within the kind of like framework that he was brought on to do, which is like be kind of dovish and hold rates at least, you know? So that's kind of what I'm thinking.
It'll be super interesting. To be honest, I'm thinking he just leans neutral, but more to hawkish. So we're kind of on the opposite spectrum there. But if I'm being honest, predicting what he's gonna say is 50-50 chance. I don't think there's a massive edge in predicting what he is going to say. He did sound very hawkish at the start. He kind of had a pretty firm stance that the Fed is going to tame inflation, and that's going to be his sort of main concern. But we also know he was installed by Trump, and I don't think Trump would just install someone that is going to aggressively hike rates. So I don't know what Kevin had to say to Trump to actually get nominated for this position. I think that the rate is going to stay the same, but it's all about the press conference. So in the press conference, we will see if Kevin leans hawkish, dovish, or neutral. In the long term, let's say thinking, I think we get a hike in September. So that's kind of the event that I'm waiting for. Of course, all of the CPIs until September. I want to see those as well. But the September meeting could very easily produce a hike because yes, there has been a ceasefire. They're no longer exchanging rockets, but the strait is still closed. I tried to look at my port watch. It hasn't updated yet. Not sure what's up with that. Maybe the guys are on vacation, but the strait is still closed. Oil, in my opinion, is still on an uptrend. Although it's pulling back, it's still overall going up. and I think inflation is going to follow. So that's how I'm positioned at the moment. You are more neutral, staying on the sidelines.
Yeah, I am kind of neutral. Just because you had already 2 rate hikes priced in already way earlier in the year, and that was when we were like over here, when
Mhm.
that kind of fear was getting baked in. And so I think that as long as we kind of stay on the trajectory of like a rate hold this meeting, and if it's anywhere from like 1 to 2 hikes later this year, I think the market already knows that. I mean, it's already priced in on CME Fed Watch tool. So I would like to
Yep.
see preferably what kind of happened at DXY at this 102 handle. Now, if you say that Worst is like, hey, I doubt he's going to be so blunt like this, but if you get the overall narrative is like, yeah, maybe 2 isn't enough. Maybe we need to hike for as however much longer we need to. But then at that point, you're pricing in something fresh, something new, something beyond just the 2 rate hikes. And at that point, I
Mhm.
could see DXY kind of going above 102. But I'm curious to see like how much the market wants to run with it if you do get some kind of a hawkish commentary from it.
Yep. Yeah, it's pretty tough to get positions in this environment, and it's summer peak vacation time. So we know, like end of July, beginning of August is usually the time to take a vacation here in Europe. I'm not sure what about the States. Is it the same thing?
It's usually like June, July, and then the
Okay.
kids go back to school like August, the first week of August.
Oh, really?
So it's kind
So
of
the
wrapping
kids go
up
back to
now.
school in August in the
Yeah.
States. Oh,
How about you
because
guys?
in Europe or in Croatia it is I think 1st of September. So it's
Really?
1 month later after the heat has kind of died down.
Oh,
And when
interesting.
when does school finish in the States?
Uh, like May, like maybe like one of the last weeks of May.
Okay.
So it's like half of
Mm-hmm.
May going into June, July, and then the first week of August they go back.
Uh-huh. In Croatia it's June, and then important to know for you viewers, because guess what? All of the big PMs, hedge fund managers, they have kids. So
Yeah.
essentially, they time their vacations according to the school of the children. That's why in September you usually get a bump in volume, maybe late August as well, as people sort of go back to work. And that's also when stocks do see some volatility. If you look at the past data.
I mean, August 5th, 2024, right? That's that same week where everyone went back to school. It seems like they went right back at it that as soon as they got back on that August
Uh,
5th sell off.
yeah, yeah. Well, that's kind of, we're waiting for something new. We're waiting for something new. I know today probably the markets are quiet because we're waiting for the Fed, which is tomorrow, and we have the Bank of Japan, which could do a surprise rate hike as well. But we need a new catalyst, something to happen. Also, did you see that? Let me show you. So as far as stocks go, let's remove this. Let's add this. So this is the SPY. Looks pretty bad. Sitting at support. This is the Qs, so the NAS, and it
Mm-hmm.
broke support. Looks pretty bad, but this is the equal weight. And shout out to Sluggy for pointing this out. The equal weight SPY is near all-time highs, which is signaling a rotation. So the rotation is out of the Qs and into other stuff. So that's still looking overall, I would say, healthy for the stock market. And I know a lot of people are saying like, or maybe expecting a bigger crash, bigger dip, but the equal weight is just not saying that. The equal weight is saying we have a rotation, and once the rotation is over, maybe we can go up. Who knows? But yeah, people are just wanting to bail on tech stocks. That's at least the picture that I'm getting.
Yeah, and you know what? Speaking of surprise catalyst, I think Nick mentioned this. However, there was a speculation that has some weight to it. But Bank of America was essentially saying that there's a chance for a surprise rate hike at this meeting. And I was saying this earlier in the chat, but like if Warsh and team are or if Warsh wants to really drive home the point where like they're giving no forward guidance, no clues on anything, and they want to
Mhm.
really drive that home by doing a surprise
Mhm.
rate hike,
Yep.
that could be a catalyst, right? And that could be a catalyst
Yep.
that could send Nasdaq lower for sure and finish us off here on this lower leg. We've taken this level of support here, this important one. The next one that I have in mind is the 26.8 to 26.4 level, right where that 200-day moving average is, and where the recent all-time high breakout was. So, a pullback of this caliber is about, well, where price is now about 7%, I would say. No, really only 4 or 5%, really. So not the biggest pullback ever. A
Mhm.
surprise rate hike could definitely drive us lower. Is this a level that you would buy if you were to get here pretty quickly, or would you wait for price to cool down a little bit? Would you look at put to call ratio? I really like this level. I think this is pretty solid here, especially the 200-day. But I'm curious to know your thoughts on that.
That is a pretty good question. For me, it's all about the EMAs. So if I put it back to my screen, I'm looking at mostly the SPY, not the equal weight, just the regular SPY. And if we do pull back on the SPY, let's say to 700, I would need to see us go above the 50, above the 20, above the 10 EMA. And then I'll be back buying breakouts on individual stocks, because the only strategy that I'm employing at the moment on individual stocks is just a second. Is buying breakouts. So it's a long only strategy, and the right conditions are when the S&P is in a clear uptrend. It has clear DMAs, because many times the S&P can go up, fake people out, and then continue dropping. I should probably consider getting in some shorts, or trying a strategy where I short some stocks. So that's probably next on the list. But for now, DMAs are everything for me.
No, that makes a lot of sense too. So just waiting for the moving averages cross back and act as dynamic support again,
Yep.
to continue riding that wave and at least know that there's some kind of buyers holding it up there.
Yep.
Shorting stocks is super tricky, man, because the losses are infinite. Stock can go up to however, and the most the stock loses to zero. So
Yep.
the long only approach, I really like that idea. Unless you're doing like, I don't know, but I know a lot of people that get crushed on like the small caps or the mid caps, short in stocks, man, because you could have like, it's, for example, in biotech or whatever, kind of like what we were talking with Ali about the FDA coming up and stuff like that. Something like that could really cause it to rip up, and that could be very painful.
Earnings can crush you as well. Like I've seen gaps of 10-15%, and if you're in a buy position and the gap's lower 15%, your loss can go up 10x. So it's tough. And just to pivot back to the Fed, the tough thing with the Fed right now is predicting how much of an influence the current administration has over the Fed. So previously, it used to be a clear case of where's inflation, what's the target, what does the Fed logically need to do to bring inflation back to the target level. And I think, let's say during Obama and maybe during Biden even, if Obama was the president right now, or if Biden was the president, I think most people would expect a hike. Like most people would expect a hike, because it's the logical thing to do. Inflation is way above 2%, and apparently 2% is the target. So it's not coming down. The strait is closed again. Like we can deduce from the previous time the strait was closed that closing the strait means inflation goes up. But because Trump has so much influence in people's eyes, he may not have the influence, but people have the perception of him having kind of like, those hands that control the puppets. That's what they think that Trump has over the Fed. And that's why they're thinking that the Fed is going to stay super dovish. And it may actually happen, especially during the press conference where it's just Warsh who was installed by Trump. So he doesn't have to have the team behind him to do a dovish press conference.
I think that considering this right here, so this recent, fluke in oil.
Yep.
The recent stalls in or the lack of strikes in recent days.
Okay.
I think they're gonna run with that. Although it's not like a for sure end to the war, I think they just use that to justify a rate hold. And then from the economic data front, I think the thing that's top of mind and what I would like to see as well to even confirm my stance is, was this lower print a fluke or is it an actual continuation trend to the downside? If it continues and the next one comes in lower, then that to me makes me comfortable. But if this is a one-off fluke here, because we did see higher oil prices in July, right? We did see that repivot there. If this comes back like this, then at that point I'm like, okay, this is sticky. This is very well sensitive to the price of oil. And if that's the case, then any re-escalation, which is likely to happen, is just going to disrupt this whole thing.
Yeah, I think that's a pretty good theory as well. You know, like the Fed, they're like traders, basically more of an art than a science. So you can make many different scenarios in which cases you will be hawkish or dovish. But the one that you just mentioned, seeing the next CPI, seeing if it goes lower or stays sticky, should be the tell, because if it actually goes lower, it means that something else was causing the elevated inflation. While personally looking at it logically, you know, the spike in the CPI directly coincides with the spike in oil. So that's my conclusion. But
I agree as well.
Yeah, I could be wrong, absolutely. So waiting for the next print could be good, and it does fit my plan where the Fed stays neutral in July. Then we get the CPI prints hot, and then we get a hike in September. That's what I'm betting on at the moment, and it may change. Okay, I've switched like 3 times in the last 3 months, so, and I made money most of the time. So I guess I'm doing something right.
Hey man, it's good to change, man. It's I definitely promote it. I'm gonna go ahead and pivot out here, Marco, for your portion of your solo segment. Before I go ahead and do so, I'm excited for tomorrow, but go ahead and do the Telegram channel, guys. If you are for some reason away from the desk, because the live stream will be going on later in the afternoon, just because of the FOMC meeting, we're going to be live streaming around it. If you are for some reason gone or away or asleep or whatever, join the Telegram channel. We'll post updates about it and everything. If there's anything worth knowing, like a surprise rate hike or anything like that, maybe some forward guidance clues, we'll go ahead and put that into the Telegram channel. So stay up to date with that. It is completely free for you to join. And with that, Marco, thank you for the lovely conversation. And hopefully we see some action tomorrow. I would hope so.
Thank you as well. And I'm looking forward to tomorrow. Do we stream together? I think we do, but before the meeting. So we can discuss the meeting on Thursday.
Actually, yes, we do. We do, yes.
Cool. No worries. We'll talk about the Fed on Thursday then. And excited to see what happens.
All right, man. Take it easy. Bye-bye.
See you. Goodbye. Okay. So let us continue. Let's watch the open, because the stock market has just opened. We have the SPY going down. What about the Qs? Ooh, gap lower. What about the equal weight gap up? Can you believe that? So that's pretty crazy. That is pretty crazy. What about the Best Buy stock? Best Buy looks pretty good. I'm out of this trade, by the way. I'm out of Best Buy. Closed it prematurely because I thought my stop loss got, or not stop loss, I thought my rule got activated with the price closing below the 10 EMA. It didn't actually happen. I closed it prematurely, and now I'm scratching my head. But it's part of the game. The main point that I have is there's a clear rotation. The SPY is down, the Qs are down, but the RSP or the equal weight, okay, the equal weight is up. So rotation out of tech and into everything else. Now, this is the exact chart that I need to see to look for buy setups on individual stocks, but I need to see it on the SPY. So the SPY needs to climb above the 50, the 20, and the 10 EMA, and all of the EMAs should preferably be pointing up. So this would be a perfect environment to look for buy setups if the SPY was going up like this. That's how I implement the stock strategy that I'm currently forward testing. So stocks at the moment, because the SPY is flat, because the SPY is below the EMAs, I'm not looking for anything. Oil today is the biggest indicator as to what is going on. Oil is down, so it looks like the markets are flipping into a bit of a risk on. And did we have any breaking news of significance. So yesterday we did Trump, Iran wants to meet, and we're meeting. There's a chance we can make a deal. So this is like the 50th post that we saw around the potential deal in the last few months. Other than that, let's see. Nothing in the red. Nothing in the red. I usually focus on just the news that is highlighted in the red. So that's about it from here. Here's the CHF. Yeah. I think the last one, mediators see progress in efforts to halt Iran war as drone attacks rattle the region. Okay, this is nothing. So I'm in USD CAD. I'm in Swiss yen. Both positions are around break even. Both are, I think, neutral swaps on my broker. I'm going to have to double check, but it's not expensive to hold them. So I don't mind holding these positions for a longer time. There's not much I can tell you about the current markets. The 2-year and the 10-year are pulling back as well. I'm positioned for higher yields. I can tell you one thing though. The crucial level in the yield department is 5%. If you look at the 10-year yield, the 5% mark is kind of the crucial level. If we break this level, I think all hell breaks loose and stocks drop massively, dollar goes up massively, and we just get some massive moves. Watch the 5% level. The top was made in 2023. We are approaching these highs, but we still have some room to go. My trades should work even if we just go up in this box. Okay. Let's see comments. A surprise rate hike would be the ultimate. I meant what I said with regards to forward guidance. It's gonna be so interesting. I'm really excited. I'm really excited for the Fed meeting tomorrow because there's so much uncertainty around it. I would prefer if I had more certainty, don't get me wrong, because I would probably make more money if I had more certainty. But just as far as entertainment goes, watching what Warsh will say tomorrow and what Warsh will say in September is going to be very, very fun. The question is, will Warsh focus on the data and the numbers like he said he would? Or is he a Trump puppet? And is he just going to follow a very dovish approach and basically follow what Trump wants? So we know that he did sound very hawkish in the first conference, or more hawkish than we expected, but it was his first meeting. It may have been just for show, okay? That's why tomorrow is going to be very, very interesting. If you're actively trading the markets, make sure to join us because we will be live streaming through the Fed event. I won't be live, but I'll be in the comments, cracking jokes and just having fun. So do join us because it's my favorite stream of the month, if I'm being honest, the Fed day. Another important event that we will get is the BOJ. So the BOJ rate statement, we could get a surprise rate hike. One thing I know about the yen, the Japanese government wants to see the yen gain some value. The yen is very, very weak at the moment. Now they have 3 tools at their disposal. First one is intervention. Second one, rate hikes. Third one is GPIF pension funds. Intervention, I don't think is super likely to happen. I have been betting on an intervention, made some money, lost some money. Overall, I'm break even on that. Rate hikes, we could get a surprise rate hike this week on Friday. So do take note that the BOJ policy rate is happening on Friday. And they have done some unexpected rate hikes in the past. The last one was in 2024 in July. So I can't really find it here. I think it was somewhere here. We had a surprise rate hike, and it definitely helped the yen a lot. So they could do that. And then, of course, pension funds. We know that the Japanese government has ordered the Japanese pension funds to start selling foreign and buying domestic assets. Here's an article that says that they have complied. They basically already started to do it. So GPIF makes first direct private equity investment amid allocation bets. So speculation grows over whether it will channel more money into its home market. I'm personally betting that they will, and that the yen will gain value. So 3 tools in the toolbox. The third one is already activated. Will we get the one, number 1 and number 2? We will see. I'm already betting on a stronger yen through selling Swiss yen. So Swiss yen is my main bet. Swiss yen is the main bet that I have to bet on yen bullishness. We have got some Swiss franc weakness yesterday, so that helped. That definitely helped. And now it's down to the Japanese government to push the yen up. When it will happen, I don't know. Could happen this week, could happen in the next 2 months, could happen in the next 1 year. My game plan with this is to hold it for 1 to 3 months, something like that. So 1 to 3 month horizon makes sense. It's in the background, it's running, so we will see how that plays out. What else do I want to cover? Ola Prime. So if you're looking to get funded, do check out the sponsor of today's show, which is going to be Ola Prime. You can get 20% off with the code A1 Live. Now, when looking at prop firms, first thing you need to be profitable. You need to have a proven edge in the markets. You need to have made money in the markets and proven that you can actually do it. Second thing, you need to check out the Trustpilot. So whatever prop firm you're looking at, open up the Trustpilot. Score 4.5 out of 5 for this niche is pretty good. 2.9K reviews, it's a pretty high number as well. What is the 1 star to 5 star ratio? 1 star 9%, 5 star 83%. I would say that is fine, especially for this niche. If you look at, I don't know, what's a shitty prop firm? Well, they all blew up, so I don't know. They blow up pretty quickly if they're shitty. So I can't really find one on top of my head. You can put it in the comments and we can check it out. Compare the Trustpilot accounts. Anyway, so Trustpilot is good. Then what you need to do is you need to join a trading Discord. You need to see what traders think. You can join the A1 Discord. You can join for free. And we have had a couple of traders get steady payouts from Ola Prime. I know Max has had a pretty good experience. So yeah, this is a pretty good company. If you're looking to get funded, you can get 20% off with the code A1 Live. And do join the A1 Trading Free Discord. The link is in the description of this video. Thanking buy or sell anyone on GPUSD, NZDUSD. CHF makes sense since SMB is dealing with the opposite of what most central banks are dealing with. Personally, this trade is mostly a bet on yen strength, not really on Swiss weakness, because, I mean, people have been betting on a weak Swiss franc, and their positions have gotten crushed. This thing is just on a massive overall uptrend. I'm not expecting a massive downtrend here. I'm only betting on a correction because of the potential strength in the yen. So I'm betting on something like this to happen. Just a move lower, just one leg lower. Then I'll take profit and I'm out. So I'm not betting on a full reversal of this trend. If you look at USD-CHF, this thing, well, you wouldn't want to go short. Or sorry, you wouldn't want to buy. I mean, it has been going down overall. Look at the monthly. There's a definite bearish bias in this chart. Absolute bearish bias all the way from 2002. Okay. I'm not sure why we don't get more history, but yeah. Anyway, just has been going down and down and down. I still have 1 more minute, so let's cover one more thing and I'll wrap it up and I'll pass the show to Tiger. What can we do? Gold. I haven't done gold today. I know you want to see it. I know there's a bunch of people looking at it. My view, unfortunately, has not changed. It still looks pretty flat, pretty range bound, pretty bearish in this area. We're sitting at a key support level, 4K, below the 200 EMA. So personally, I don't like this chart at all. Fundamentals are bearish in my opinion. I would prefer to sell because I'm betting that the strait remains closed. It puts pressure on oil. It puts pressure on inflation. Fed rate hikes are never bullish for gold. They are bearish. So my personal game plan is to look for a leg lower and then to sell if we can break the 4K level. That's what I'm thinking. That's about it for me. Thank you very much for watching. You can catch me tomorrow. I highly encourage you to join us tomorrow for the Fed meeting because it is the most important event of the month. So yeah, that's it. Good luck. And you have Tiger coming on in 30 seconds. So see you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Morning, everybody. Happy Tuesday. Hope you're all doing well out there. Let me know, as always, what tickers you're looking at. We'll check them out. I was just doing a little looking here on oil, doing a little looking on gold as well. And we are currently kind of chewing through the equivalents of this GLD 370 put wall, guys. We have kind of dropped a little bit below. I think we're actually 369 at the moment. So pretty decently sized one, a little smaller one down at the 365 and the 360 level. So what does that look like over here on XAU USD? Well, again, currently we are chewing through what was a demand zone at one point as we speak. That's that blue line. That's the 370 equivalence wall. As long as I measured it correctly, which I do believe I did. The 365 equivalents would be a little lower. Again, hovering right around this was a 30-minute zone of demand that I've got drawn up down here. And then we do also have a 360 level that's a little deeper down. So just a couple of walls of puts that are coming into fruition here of late, but nothing has changed for me, guys. I still need to see that yellow line come into fruition. Still need to see a break of all this so that we can look for possible pullbacks on buys, since we are getting a +4 on the edge finders. So nothing's changed for me on gold over there. Silver, same thing. Still got that lower low. Okay, we haven't even gotten that higher low yet. So it's got more work to be done. So that's my thoughts on gold. Just kind of, again, just pulling into a pretty decently sized put wall as we speak. So could potentially act as some support But I just didn't really see any demand in that immediate area that I like, because again, it's already been tested right here. So old news to me. Next stop is going to be the one a little deeper down. So that is that. As far as oil goes, we did obviously have a pretty decent perfect storm of things that happened over the weekend. Obviously, we had a little bit of de-escalation on the Hormuz situation over there. We've had a few days in a row now with no strikes, or at least none that have been reported. We did also bounce into that overhead supply zone, which did give us a push. We had a call wall we bounced into as well. So guys, I'm telling you, I'm starting to fall in love with Nick's put and call wall tool that he has added over here to the crowd sentiment section. So definitely get your copy of Edge Finder if you have not already. I think he mentioned yesterday that the discount is just about to come to a close. So definitely check that out if you guys have any further thoughts or looking for your own copy. It's really good stuff over here. But anyway, yeah. So since that push away, we've actually dropped down into another smaller zone of demand, and this is too tiny of a time frame to me. But, for what it's worth, we are currently bouncing into a little bit of a 15-minute zone, 15-minute, 10-minute. But again, guys, the lower the time frame you go, the noisier it gets. So I personally wouldn't be placing any bets of any substance on that particular area there. And especially because I think we are still pretty well neutral anyway over here on the Edge Finder. So, but will be interesting to see if we get some type of bounce, even if it's just nothing more than the natural ebbs and flows of the markets, and hopefully continues down, because we all like cheap gas here in the States and abroad all across the world. So that's that. But but again, the 30,000 foot view is we bounced off the pre-war daily demand, and now we're bouncing off the daily supply. Okay. So that's, again, just the timing mechanism, not necessarily the reason that it's doing it, but that's where collections of orders are hiding for this perfect storm that we've had over the last few days. So that is oil for you. Bitcoin's still pretty lazy, in my opinion, still going sideways. I've still got absolutely zero play. It's been a while, but I know I've told you guys the next major support I see is going to be this daily demand all the way at 55,300 area, which is at the bottom of the remnants of that monthly demand. Okay. So monthly, daily demand, where I could see at least some type of a potential bounce. But that is, of course, in relation to a pretty substantial downtrend. Okay. So if we start getting down to that area, I mean, our EMAs are going to turn around, and we're going to be breaking some more lows. So yeah, same thing with Bitcoin, just like gold. Just need to see a break of that 67,250 area for a change of character. To even consider any types of longs on this thing. And that's if and when we get a bullish signal, if and when, on the Edge Finder. So that's Bitcoin for you, just kind of getting some of those top line assets out of the way for you guys before we dig into what you guys are looking for. Howdy, Kirthan. Howdy. Looking forward to being a host with the A1 team. Hey, do it, man. Just do it. Hey, there's an old saying, say, fake it till you make it, right? Fake it till you make it. We don't have to be like 100% know-it-alls on this channel. We just have to understand a few basics, understand a little bit about fundamentals, a little bit about sentiment, a little bit about technicals, and over time, build your own little strategy up, and you could be the very next person on a show like this. It's a lot of fun, but you got to be bold with it. Okay, you got to be bold with it. So just get your 10,000 hours of chart time out of the way as fast as possible, so that you can look at a chart in 2 seconds and see where your levels are. Makes things a lot easier, a lot quicker, a lot better. And then, yeah, just get some basic understanding. Okay? We don't have to be economists on this show. Lord knows I'm not. Okay, the fundamentals, the whole idea of fundamentals is the newest concept to me when it comes to my 12 and a half years of trading. So, in a sense, I'm kind of playing catch up. I mean, Nick and the guys run laps around me probably for the most part when it comes to the fundamental side of things. But I think I got the technicals down, which kind of helps me out as I get, better and better each day on the fundamentals. 1% better. That's all it takes. Just 1% better, guys. 86 to 85 WTI. Let's go back to gold or to oil real quick. 86 to 85. Oh, you're looking on some smaller stuff, some smaller time frames. Is that right? 86, 85. Yeah. Yeah. Wouldn't surprise me. Wouldn't surprise me. I mean, again, we are in a smaller zone, smaller time frame. It is only a 30 minutes. So again, it's noisy. There's also a little bit of a tiny black hole over here we could possibly get lost in for a while. Never know. Okay. So I don't personally like trading zones like this whenever I know I've got all this nonsense to the left. I like to have open space to the left of my zones, whether it's demand or supply, right? So, but anyway, just need some more information on oil. What else you guys got ticker wise? Let's go take a look at the setups over here. Pound yen is still at the top of the list. Been up there pretty comfortably for a while. Still looking for price to retrace. It does still have a little bit of retracing that I needed to do to have any interest in some possible longs over here on pound yen. Trends looking okay over here. We did drop into this higher zone that I talked about last week. Had no interest in it. I just think it might be a little expensive, but still looking to see this drop. A little bit of contraction, expansion, fall into zone for possible buys. So that remains kind of the blueprint for what I'm looking for on pound yen. And it's still a long ways away, 200 and something pips. 200 something pips just to get down to a little bit more of a discount area for me, guys. That'll be probably around your 61.8 for you fib traders out there. This demand right here, if we're looking at swing low, swing high, that looks to be around that golden area, that golden zone. So that's pound yen, number one asset, still on the top setups list over here. CAD yen, Kiwi yen. Let's go have a look at those. Go have a look at those over here. Yeah, pretty pricey as well for CAD yen. Got a demand out there in the middle, about the 50% line, 50% fib line. It's a little on the middle, a little bit in the middle, but let's see here. The one hiccup I have with CAD yen is that when this 2-hour zone was created, okay, this 2-hour candle here, when we bounced into supply, it didn't just chew right through it. Got a pretty decent bounce off of it before it finally retraced. So, not saying I wouldn't trade that, just saying, yeah, definitely would be cutting some risk off of this thing because of this right here, this big pullback. Remember, strong zones typically will just take out an opposing zone a lot simpler than that. This one took a handful of days just to bounce and then regroup before going back up. So yeah, I'll stick with that. I'll stick with this 115 area. It's also a pretty strong psychological number hanging out in the middle of that demand zone. So that's going to remain where I sit on CAD yen, which by the, let's see here. Yeah, never mind. That's where I'll stick with that. As far as that other one, what I did just say, CAD yen, Kiwi yen. Kiwi is still the strongest currency from a fundamental perspective. The yen is up there in the 60s as well, but the Kiwi is at 83%. And it's a very similar structure for where the demand is over here as well. I would have preferred to see Kiwi yen break. Let me just go to a one chart view for you guys. I would have preferred that it broke and closed above this structure, but all we did was just touched it. Okay, we just touched it and we're starting to retrace already. So another similar story here. Probably just cut off some risk on this thing. Okay, if we're looking for a trade down here, the volume on this particular one, on this particular demand zone, is not the greatest. So I'd probably stick with the pound yen as my favorite between those three yen pairs that we're looking at. But yeah, there's no denying the strength of the Kiwi when we take a look over here at the surprise meter. Okay. Now we need some data because the Kiwi's data is pretty old overall. I think July 20th was the last piece of data we got. I think we had one other July report. And other than that, everything else is pretty well old. So just looking for some new data. Yeah, we got July 20th for their CPI. And then we had July 9th for the manufacturing PMI. So, but hey, you just have the one negative report. That was the services sector. But that was way back on May 1st. And they are still comfortably in contractionary territory being under that 50 baseline. So get a little bit more help on that front. This thing will be potentially a hell of a lot stronger. Let's see here. What we got over here in the chat? Pound dollar, Andrea. Yeah. CAD yen, says Anton as well. Yeah, we can take a look at those. So pound dollar. Still giving us a very bullish +7. CAD yen number 2. Yep, that's the one we just looked at. So let's go back to pound dollar over here. Let's see what we're playing with. Still need to see that structural break. I would like to see on the high side up there. Let's go refresh my chart over here. Yeah, remember when it comes to this asset, we did kind of turn our moving averages around to the downside, that alligator's mouth. So that is giving me a little hesitancy, but there's no denying the discount we're getting down here on this 4-hour zone right here, down here. So that's still going to remain my favorite one. Like I mentioned, I think on Friday, guys, I still, rather than using a 1-hour bullish close and then a break of that, I think I need to see a 4-hour close. I'm just going to be a little bit more safe with this, because at this point we've obviously broken that downward structure. Okay, we've broken through this week and a half support, little miniature support that we kind of built up here, and now we've pierced through it with conviction to the downside. Just blew right through this smaller time frame demand over here. This does remain my favorite demand on this particular impulse move to the upside. Okay, that bullish impulse move that I have drawn up in the past. So that collection of candles that broke all this structure here, that's, I think, still going to be the best discount. But again, it's just the EMAs have turned around. We got a little bit of a downwards pressure going on. The dollar obviously had strengthened during the 12 days that we went back into throw a lot more missiles back at Iran. We've obviously gone 3 days, I think. Is it 3 days, 4 days, something like that, without strikes? And it sounds like they are starting to talk a little bit more, the intermediaries. So hopefully, now how many times have we said hopefully? Hopefully that something good will come out of that. Okay. We don't have a dry ink yet on a deal. So we're still looking for that ultimately to, if we get a dry ink deal at some point, this is going to be looking extra good. But the reality is we just don't have it yet. But I'm still going to keep an eye on this 132.5 level over here on pound dollar. Look for a very strong 4-hour bullish close, bullish engulfing candle with a wick, volume spread analysis pick up here at the bottom. Yeah, gold, we just went over that. Itronics, we just went over that at the very outset of the show. Still got to see a break of this structure here for me personally. It's going to also break that 385 area call wall, rather, over on GLD. Break and close above that, suck in them shorts and smoke, or suck in the longs and smoke them fools. Okay, bullish activity, make them feel good about themselves, and then rug pull them. When we rug pull them, that's where I want to look for a demand, and then take price where they thought it was going to go anyway. Only they're just not in the trade. It's a shark infested world, guys. That's just how liquidity works. It's not my rules. Okay? It's just the rules you got to learn to understand how markets actually move. So I think that's a fairly prominent one up here at that 385 area. Again, on GLD, but we just got to measure it and kind of get the equivalence over here on gold itself. So that remains what I need to see. I've got no interest in buying anywhere down here because of the fact that we still have lower lows, or I should say we have lower highs. We do have the higher low, but we don't have the lower high yet. Or the higher low. Sorry, guys. Higher low. I need a higher low, and I also need a higher high to get the pullback. That tells me that the structure has changed to the opposite side. Again, we're turning that big oil tanker vessel around, and it takes time to do that. Can't just do it on a dime. So till we get that, I've just got no interest in it. And plus, it would be nice to see something a little bit stronger than a +4 over here on the top setups. But that's just currently what we got, guys. SPX, yeah, ODM. Let's go look at the indices. I don't think that's something I personally have looked at with you guys a ton lately. So if we go over here, of course, they are all showing neutral over here on the Edge Finder. Now, the only index that's not is the FTSE 100, the UK 100. So that's a +7. We'll definitely take a look at that. Before I look at the chart, though, I did want to take a gander once again over here on the COT report. Okay, so the S&P did have about a 1.86% net change, week-to-week change. So that is a pretty decent, a pretty okay bullish look, okay, from the smart money accumulating. Now, This was mainly by the fact they got rid of a bunch of shorts, because as you can see, they actually got rid of 2,400, almost 2,500 longs, which is a bearish number by itself. But then when you factor in, they did get rid of 24,000 shorts. That's why we're getting a bullish look on this thing. Okay. I personally like to see both numbers bullish, but it was still bullish overall nevertheless. So that is helping us. That is giving us a little bit of a help on the COT report, looking and seeing what the smart money's doing. If we look at the overall scoring, Dow is a +2. What do we got on S&P? It's a 0 as 0 gets, guys. Okay, -1 overall on the technicals, +1 on the sentiment, in large part to that COT report, giving us that 1.86% week-to-week bullish change. And then straight up zeros for the data. Again, the U.S. data, the U.S. dollars data is a 40% beat rate. We've lost 60% on that number this month, this whole month, starting back on July 1st when we got that data. So when we got that manufacturing PMI data. Okay, so it's completely reversed itself. But again, like we say every day, the geopolitics are basically what's propping up the dollar right now. Okay. So anyway, going back over here to the chart, EMA's kind of pointed back to the downside over here. We kind of broke through some of this structure, a little bit of support that we had right here. Now we're pushing down. So the EMAs, I don't like right off the bat, and not until we start breaking some structures to the upside. And that's been guys, that's the common theme for me right now on the items I'm watching. Is I just need to see some changes of character, some structural breaks to the opposite side, and in order to feel a little better about the trend turning around, so that I can take advantage of it. As far as SP though, I just feel like this is catching a falling knife, okay? Especially looking at it on the 4-hour chart. So absolutely no play. I think I drew up on a daily what I want to see already. That yellow candle right there, that yellow line. Same thing, guys. Structural break. I just got to see a break of structure to the upside. Now you could look at this, and that's in large part due to the fact that we had bounced into this overhead supply. Now we've already touched it once. So yes, this is a mitigated zone, but we did go a little bit higher to collect a little more liquidity from the top side of that zone. Probably partly why we're getting a little pushed down, not to mention the geopolitical situation. But you could look at this. Okay, if one were ultra aggressive, well, you could look at this as a daily demand right here. But is it a demand zone that had a lot of force behind it? I just don't know. Get that off my screen right here. Daily demand, the basing structure had a yellow candle. Leg out, though, did not. It gave us our gap. But again, it came just right back up to the supply zone. Did it have the power to break through the remnants of a supply zone? Or better yet, a structure overhead? No, it didn't. So again, that's why I say this to me is a minor demand zone, a weaker demand zone. And then when you dig deeper into the candles on a 4-hour, all I see is efficient market structure throughout here. None of these, every single one of these wicks, every single one of these candle bodies overlap the ones to the left, to the right of it, the second ones. Okay. You had one more sweep right here, which closed all the rest of this off. There's no gaps. There's no fair value gaps. There's no, runaway gaps or anything. It's just efficient candles. So I don't like the 4-hour picture at all. Not only do I not like the daily, but I don't like the 4-hour either because of the efficient market. So I just don't like it. I don't like the S&P at all. In fact, I'm going to delete that demand because it's not even strong enough for me to even think about. Let's see. Old demand zone that worked out. Get rid of that line there. Yeah. Same thing, guys. Just give me that yellow line of price movement, and then I'll look for a retracement at that point. Until then, got no interest. Nasdaq's even worse. It's going down even deeper. Go to a daily real quick. Now and we're chewing through what I call a weak demand zone here as well. It's at the higher end of the curve. We're in the diddling in the middle. You guys see my three sections broken down. Okay, that's the middle. The red's a no-go for me, guys. That's why I colored it red on purpose. It's hard to see with the black backdrop, but I purposely color the middle of the zone, the middle of that curve analysis, red for a reason. Red means stop. Red means no go. Green, on the other hand, at the bottom, that means go. So this thing to me looks like it's trying to turn all the way around. I just don't like any of these zones in here to potentially push price around. Now, obviously, you go a little deeper down, we start bouncing into some overhead resistance points. Some overhead resistance points down here. But even with that, we still got ways to go to get down to it. So nothing on the NASI. The Dow, I still think, looks the best out of all these. In fact, for the month of July, this thing's pretty well followed the Dixie to a T. I mean, the Dixie had a slow decline. You had a little bit of a downwards trend line, just like the dollar, that kind of broke structure lately to the upside. And same thing, though. Absolutely the same thing. Break of structure needed. So not only are they not on our top setups, but there's just some work that I think needs to be done in order to take advantage of any potential longs over here. Yeah, 4 hour. Yeah. I mean, there is a decent zone all the way down here at 50,411. Actually, it's a pretty good one. But, by the time price comes down there, it's going to be turning the whole situation south. Talking about this zone down here. Lower lows, lower highs, lower low, lower high. EMAs are flipping around. So even that would be a gamble, I think, talking about this 4 hour, let's see, this 4 hour demand down here, all the way down here. And that's a long ass ways to go anyway, 50,300. So expensive, guys. These indices have raised up quite a bit despite the war and everything. They just got a little on the expensive side. I'm not saying overpriced because, hey, what is overpriced, right? We all know these things can be irrational longer than we can remain solvent. So I just need a better value overall with the indices. I need some discounts, guys. Discounts or break a structure and give us a decent looking zone, but not anything in these areas. But the FTSE, on the other hand, which is giving us a bullish reading. Ooh, did we finally break that overhead supply? Okay. So first, let's start with the daily. EMAs are pointed to the heavens. That's a good look. Higher highs, higher lows. Okay. Look over here. Look at this. Okay, this just happened. This is happening this hour, actually. This push through. So that's a good look. Okay, I drew up on I think I might have drawn up a daily or 4 hour. Right here's what I drew up just the other day. Break and close. If we break and close above this, as always, not financial advice. If we break and close, which we've already broken, now we just need a close. Well, then I might be interested in a retracement down to one of these zones. I told you guys I missed out on these two zones already last week. So the zones are clearly working out for the moment in this particular structure. So what about this zone here? Okay. That's going to be the one I'm going to keep my eye on right here. I just hope that we can get a 4 hour close. And we got 2.5 hours for this candle to do whatever. Hopefully we get a continued push up so we can see some actual strength, some gusto on this move. If we do that, I'm going to be interested potentially in this zone down here. Okay. So yeah, that's pretty exciting to see that we broke that structure, broke all this supply over here. And for extra bonus points, what would really make this thing stand out is to break the swing high itself. So I know I drew the yellow or the green line there. Oh, let me get rid of my magnet tool. Okay. I'd like to see a break and close above that. That's my wish. Now, does the market care what Tiger thinks? No, absolutely not. But Tiger cares about what Tiger thinks, and Tiger wants a close above that. If that's the case, that'll make this look even more attractive. Even more attractive of a zone, guys. Remember, let the market come to you. Don't chase the market. If it doesn't give you a grade A setup, it's not always worth taking. So that's the picture right there for the FTSE. What else you guys got? Okay, S&P, yeah, indices, yeah, Anton, just need to see the indices go up a little more. Break some structures, guys. It's all about structural breaks for me. Remember, structural breaks take a lot of money to do. When there's a lot of money breaking structures, that usually means there's some underlying strength somewhere in that impulse. So for me, just got to go look for the demand zone. Now, it's not that simple, but that's the basics. Make sure the fundamentals line up, the sentiment. Make sure I got volume pumping through it. And then a couple other momentum indicators, and we're good to go. So let's see here. I got just a couple minutes left. I think 1 minute left. Euro Kiwi. I did want to take a look at these real quick. Euro Kiwi and Nikkei, because I know Euro Kiwis have been kind of flirting with us this last few days. Yeah, here we go. Okay, so Euro Kiwi. Yeah, okay. So Euro Kiwi's giving us, okay, I like this, guys. So we got a daily supply. Now it is in the middle. So remember, just because it's in the middle doesn't mean I'm necessarily going to, it doesn't mean I'm going to just automatically skip it. It just means I've got to be extra strict on the bounce, timing the bounce. Bearish engulfing candles. Okay. Shooting star candle after we touch the zone, breaking that to the downside. Switching from a 1 hour bearish close to a 4 hour. Just some things to give me some extra odds enhancer potential on this. Daily supply, and I know I'm out of time, but I got a daily supply, and I also have a 4 hour supply. So this is the confluence I like to see. Leg out volume could have been better. I got to be honest, that sucks, but we do have a nice gap. We broke a 4 hour demand over here, and then we broke the swing low. Now we're starting to get a strong move up, and it's starting to base out. So I'll end it on this. Okay. But what I want to see, and oh, by the way, the 200 EMA is bouncing through. So that's another good sign. If we can get something like this, might have a short on our hands. And not get greedy, just take it down, because we do have a easy to see 4 hour demand sitting right here at the very bottom for an easy place, or a simple place, simple visual place to take our profits. So just need to see a little manipulation happening. The basing is looking good. 4 hour. I like it, guys. That's probably going to be my favorite short setup. And then the FTSE 100 is going to be my favorite long setup for those reasons I just listed. So guys, that's all the time we got for you today. Get ready for tomorrow. It is Fed Day. It's Kevin Warsh's second speech. I'm sure we're going to hear about inflation, the good side of that, more labor data, and not to mention his 5 task forces, because at the end of the day, there is a task force for that. So ladies and gentlemen, take care. Later time tomorrow. Have a wonderful day.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.